Good morning, traders. Welcome to NinjaTrader Live. I'm Maggie Lake, and joining me today, Senior Macro Strategist Craig Shapiro, Senior Economist
Go.
Tracy Shuchart, and Senior Market Strategist Trim Cagnina. Hi, everybody. Good morning.
Good morning, Maggie. Good morning, Naples.
Good morning, all.
Good morning.
We didn't get the warm weather that Tracy tried to dial up yesterday, so send some warm thoughts her way.
Well, not only that, it's not only is it snowing up there still, maybe, but it's also snowing on the Bitcoin. It's being weighted down for sure.
Yeah, yeah, that's a bit of a dog. We're going to talk about that, I'm sure, in a second. So it's interesting. We got a poll up, and it's kind of split across the board. But stocks mostly flat after Monday's sell-off. I think people were maybe hoping we got a bounce, but it's looking a little wobbly. Gold down a bit on some profit taking, but everything a little bit flat. We'll see if the news changes it. Shai, what are you watching in that department? What are the headlines today?
All right. So today, the Trump's 10% levy from Section 122 went into effect as the IEEPA rolled off from the Supreme Court ruling. What is interesting that this is 10% tariff. If you remember, he signed an executive order last Friday authorizing the 10% import tax just hours after the ruling, but then he subsequently threatened to raise that number to 15%. However, as of this moment, it's just 10%, although they say they are working to increase that to 15%, but nothing has been finalized on that front. So that means that this is actually a lower rate than some of the countries were getting initially, which is very interesting. Next, we had a BNY macro strategist came out and said that the U.S. can just sell more T-bills to offset the lost tariff revenue. He said the rough calculations suggest the U.S. is set to lose half of the approximately $20 billion per month it gets in tariff revenues, and the U.S. can lean on T-bills to plug the substantial gap, helping explain why the reaction in U.S. Treasuries to Friday's ruling has so far been muted, and also noted that there is plenty of demand for any new supply that would come onto the market for the 10-year. Moving on to copper. Copper jumps as China cheer the prospects of lower U.S. levies on China. China is one of those countries where we had 20% tariffs. Now those look like they will be 10% tariffs. Also notable for people trading the metals markets, China has reopened after the Lunar New Year break in the overnight. So they are back in the metals markets, and they tend to be buyers of copper. So we do see copper up in the U.S. and also in London. We did have Home Depot earnings today. Now, Home Depot's earnings are important because the company is the largest home improvement retailer in the world, giving it kind of an outsized influence on retail and housing sector. People watch it closely. It kind of is a barometer of the U.S. housing markets, and they were a beat and suggested that appetite for home projects is holding steady despite elevated interest rates and persistent inflation concerns. So Home Depot a beat. Looking good for the housing market. In the credit markets, we had JP Morgan's Jamie Dimon came out and he said he's starting to see parallels to the era before the 2008 financial crisis, with some lenders making riskier loans to boost net interest income. He expects the credit cycle will eventually sour again, and there's always a surprise in the credit cycle, and this time around it might be software because of AI, but he also noted that his bank is safe from this, of course, right? And then everybody knows that Citrini report that came out yesterday that tanked DoorDash, Uber, Salesforce, AppLovin, ServiceNow, and payment giants Visa, MasterCard, American Express, and also the expanded tech software ETF IGV sank on that. If you didn't read it, it is, I talked about this a little bit yesterday afternoon. It is on X. If you just go to their X handle, but basically the report kind of imagines a world where rapid advances in machine intelligence render large swaths of human labor obsolete, and he sketched out a scenario where 5% of white-collar workers could be cut within 18 months. That has obviously spooked a lot of the markets yesterday. He was on Bloomberg last night kind of talking about it. And what he said is he's now calling for an AI tax to cushion those job losses. He said government should consider taxing incremental or windfall gains from AI. Without it, rising employment will hit consumption, and the U.S. is likely going to be the most affected. So, interesting note from him after his report unleashed havoc on the markets yesterday. And the circular nature of the whole AI industry, AMD clinches a second mega chip supply deal with Meta. This gives Meta the option to buy up to 10% of AMD. They struck a similar deal with OpenAI last year, if you remember. So the kind of circular nature of all of those companies kind of reliant on each other continues. And last but not least, don't forget, we have the State of the Union address tonight at 9 p.m. Eastern Time. And then moving on for the data today, we have at 8:15 a.m., we have ADP weekly employment. It's not the monthly, it's just the weekly. We'll kind of shout that out when it comes out. 8:30, we have Philadelphia Fed non-manufacturing activity. 9, housing price index. At 10, Richmond Fed manufacturing, conference board consumer confidence and wholesale inventories and trade sales. And at 10:30, Dallas Fed services activity. I don't expect much of those to be a market mover, except for at 10, consumer confidence will be closely watched.
Yeah, especially in as we approach the State of the Union, when Trump is, going to get up there and try to sell how great the economy is. If you're coming into that with a really weak number, it's going to just sort of, I think, lay out the disparity between what policymakers are saying and consumers. That Centrini report was so interesting. Craig, I'm curious, when you watched the action yesterday, and we'll see if we get any follow through today, what your thoughts were about that. Someone pointed out to me that, some of what they said, and they laid out where the AI job loss, they make the link to why it could become systemic too, right? This sort of negative feedback loop they filled in. And it was a thought piece. It wasn't a forecast, but it was a, what if this were to happen? But somebody was like, listen, a lot of this has been discussed already. Why did it hit the market so hard yesterday?
Yeah, I mean, we've been talking about, this idea, this thesis for quite some time now on the show. We were talking about the breakout in bonds last week and how it was potentially sniffing out some of the deflationary forces that are becoming more obvious now as AI accelerates. We talked about, the coding advancements from Anthropic and ChatGPT a couple of weeks ago, and how it seemed like a rip the Band-Aid off moment where the SaaS apocalypse was starting to accelerate, right? Different industries, different subsectors were getting hit more and more, whether it was finance, transportation, cybersecurity, a bunch of areas. And so it seemed like it was this rolling crescendo. And then the Centrini report just kind of hits the tape over the weekend, and we go into what Ben Hunt refers to as a common knowledge issue, right? It's like we finally got it into the market narrative, right? Everybody kind of can't avoid this conversation. And so, I think we had a bit of that shoot first, ask questions later dynamic again yesterday, right? And so all the names that he referenced in the report kind of get hit, and people are really starting to dial back and say, oh my God, my portfolio is really susceptible to, if AI is as good as we think it is and could be, then there are some real structural issues here. And even though the idea from the article is this is going to play out in 2 years, well, we know that AI is moving at light speed and everything is happening quicker. And so we get this kind of accelerated reaction to this report yesterday. And look, I think the bond market continues to, be firm because of concerns about, the deflationary impacts of what AI is doing. We're talking about replacing 6-figure white collar workers with coding that costs, I don't know, $20 to $200 a month, right? I mean, the numbers are, it's staggering amount of savings potential, but it also is, a pricing power issue, right? This productivity paradox. If everybody has the ability to use AI, pricing power for these services industries is basically going to zero. And so we have corporate profit margins that are at exorbitant levels. They're going to come under pressure from new entrants looking to attack these markets. And so I think that's the dynamic that folks are starting to increasingly realize. And what did we see yesterday too? We saw strength in SanDisk, strength in Micron, strength in Corning, strength in the hardware related parts of these industries, and continue, outflows from companies and areas of the market that are going to be exposed. Is that trend going to continue? I don't know. The dispersion is quite aggressive right now. We're in the 99th percentile of dispersion trades here. You look at semis versus software is in the 99.9% degree of overbought on a relative basis, dating back, for the last 15 years. So can this continue? Sure, but we're in a place where a little bit of a precarious place. How much more can we stretch these relationships? Time will tell. But look, you get another headline this morning: Meta investing in AMD, and it's just kind of more fuel to the fire here. So, but yeah, it was a big report. A lot of back and forth on X about it.
Yeah,
I think we're going to be negotiating this outcome here for the next several days and weeks and months, really.
Yeah, and it's all over Substack. The reports on Substack too, if you're there. And there's a lot of robust conversations about it. It's like very herd mentality, right? It's like, oh, CapEx, AI is the future, run, 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 buy, buy, buy. And now it's like, oh, it's going to kill us all. And it's like such a big stampede in the other direction. There's a lot of nuanced conversations that have to happen, but right now it's kind of seems like it's being driven by sentiment. Hey everybody in the chat, Shy, when you were giving some of the headlines, someone said too many Fed speakers today. Streamside said way too many Fed speakers today. And I think Fed Goolsby just came out and said he's calling for hold on cuts as current rate of inflation is not good enough. I don't think Goolsby's a voting member right now though, is he? But
no, he's not.
Yeah, but
we
there
do
does
have
seem to be.
sorry.
Go ahead.
Sorry. Just there are a lot of Fed speakers. We have Goolsby, Collins, Bostic, Waller, Cook, at Goolsby again, and Barkin and Collins on a panel. So
yeah. So a lot to navigate ahead of that. It will be, and we of course have Danielle DiMartino Booth coming up just a bit later. Jim, what's on your radar today?
Well, kind of interesting. I mean, right off the bat, it's crude oil. I mean, crude oil again is up almost 1%, not quite 1%, kind of testing that $67 handle. So that's the first thing I noticed this morning. And then the second thing I noticed is the Bitcoin is just about to fall out of bed here. So those are the two kind of extremes. I feel like the equity markets, the stock index futures are still heavy right now. I mean, we're literally for the E-mini S&P, we've been trading around that gamma exposure level number one, around 68.50. Kind of, we'll see if that's just going to be kind of the main price today, or if we're going to break down even lower. It's not looking really good on an equity chart, but volume's kind of normal today. There's no huge amount of volume anywhere. There's no small amount of volume anywhere. So I do expect some decent trading as we get, as the bell rings. So then, of course, metals too, as Tracy pointed out, we got to keep an eye on those. Those all have a really kind of a nice bid. I mean, copper's up 2.35%, which is a pretty big move. We're getting close to that $6 level on the futures. So there's some markets that are on the move today that are going to trend a little bit and probably do some breakouts. So we'll focus on some of those on the Edge report. But Maggie, I do have a couple of really fun special announcements I'd like to throw out here right now.
Let's hear 'em.
So we are, everybody, get your pencils out and get your mouse going here. We're going to put a link in the chat. If you want to lock in the lower commissions to celebrate our upcoming launch of the NinjaTrader Live Socials, we're giving away 5 lifetime licenses. You could enter now for your chance to win one of those licenses. They're valued, as everybody knows, at $1,499. And we're going to announce the winners on Monday, March 2nd. So if you don't have a lifetime license and you want one, here's an opportunity. Just go ahead and follow that link in the chat link and enter to win. It'll be fun. The second
Awesome.
announcement.
I wish I had one of those sound machines. That sounds like a pretty good deal.
Exactly. Secondly, too, I want to remind everybody, March Madness starts March 2nd. Again, anybody who hasn't traded in the Arena Challenge, and even if you have, they're a lot of fun. Get to use the NinjaTrader platform, and you get to compete for prizes. There's $20,000 of cash prizes that we're giving away for the March Madness Arena Challenge. I'm going to do it. I'm going to participate in it. I don't think I'll be able to get any money, but it'll be a lot of fun anyway.
I was
So
going to ask if you were in it.
for sure, it's good. It's good. You should do it too, Maggie. I think it'd be
Well,
awesome.
if my brackets lately have been any indication, I might have a better shot at that, of getting some cash from that, than any bracket I've been in, since they've been completely blown up in the early rounds. I have not had a good track record there. So
Yeah.
I like the sound of it. Question in the chat: what are licenses exactly?
So a lifetime license gives you basically you get the NinjaTrader desktop platform, which is the gold standard of trading platforms as far as I'm concerned. You get reduced and it's a lifetime. You don't have to pay ever again, and you get a discount on your commissions, a pretty decent discount on your commissions when you're trading, and that again, it's sticky for your lifetime. So it's a thing that's been around for a long time. It's a little pricey, I'll admit, but the value is there. So it's definitely I use the desktop all the time. It's just spectacular trading platform.
Awesome. Thank you for that question. All right, let's swing back to talking a little bit about some of the factors that may influence trading today. Tracy, I'm curious. So we just saw that Goolsbee, okay, he's not a voting member, but if I'm not mistaken, we also had a Fed governor yesterday saying, listen, might be the jobs number might be I'm going to hold off on making a call until I see that jobs number. But Goolsbee talking about inflation, I thought the emphasis was really on jobs. But do we have producer prices? Do we have to flip back to also now watching inflation data when it comes to the Fed? Is that going to be a market mover?
Yeah, absolutely. I mean, I think we had them all kind of concerned about the job market. We had a good jobs report come out on January, so that kind of looks like that's put to the side a little bit. Now we've been seeing over the last month or so Fed speakers reintroducing that they are watching kind of the inflation. And that was actually Waller yesterday, which is kind of a hawkish pivot for him because he's, definitely a dove. So interesting for him to say that he would probably not dissent at that meeting and vote for, 25 basis point cut, which he did back in December. So a little bit of a hawkish tone from somebody that has been very much a dove.
I wonder if they're all having some conversations to, kind of ring Warsh when he comes in and act a little bit like more like an entity, so he's not the outlier, since obviously there's going to be a huge amount of pressure to lower rates. One wonders if they just want to sort of throw some uncertainty up there. Just conspiracy, but you never know. Craig, it's interesting that the AI narrative and the sort of risks around that is moving so quickly, right? Just steamrolling over once it gets going. The private credit is like whack-a-mole. I mean, Jamie Dimon comes out and says that, okay, maybe he's talking his book, saying that JP Morgan's well positioned, but everybody else is dumb. Not surprising. But the guy has been, through a crisis or two, sees so much on the retail side of banking as well as on the private credit. I mean, this guy sees a lot of flow. How are you thinking about that private credit risk that bubbles up and looks like it's going to be dangerous, but then kind of goes away? And then, as opposed to the AI steamroller, which everybody sells first and asks questions later. It seems very different dynamic.
Yeah, I mean, yes and no. I mean, I think they're obviously related to some degree because the private credit markets are overweight some of the SaaS and software related names. So there's a little bit of this incestuous relationship here as the AI momentum accelerates and there's more concern about future deflationary fears. Then the private credit markets are getting more concerned because they're exposed or they're exposed to future growth potential and the build out. And so there's a little bit of back and forth dynamics in play there. I think the bigger issue, what we have now is you have, the markdowns in private credit have started. Various BDCs and other closed-end funds that are related here are trading at big discounts. I think it's interesting. Yesterday, Boaz Weinstein, who's a hedge fund manager who focuses in closed-end funds and focuses in credit, came out and made an interesting comment, basically saying he's buying up, some of this distressed private credit-related names and basically shorting high yield, shorting credit that's at par, and basically saying, this dichotomy between the private and public markets is just becoming way too wide. If things are as bad as what private credit is saying, then the public credit markets are, chronically overpriced. And so buying, high yield puts and CDX on high yield names seems like that's where he's focusing his attention and trying to buy, distressed names that are already really discounted this reality. And if things are not as bad as what the public markets are saying, then the discounts that he's buying these private credit names are very good. So now look, we've seen these liquidity mismatches before, dating back to the financial crisis. There was kind of similar types of issues where the private illiquid markets started to fall first, and aggressively so, and the public markets kind of held on, and then eventually they did fall, but then the private markets fell even more. So we'll see. Are we going to move into that dynamic? It's uncertain, but I think there is a large valuation gap now between what private markets are pricing in for this future reality and where the public markets are. I mean, still the S&P is a stone's throw away from all-time highs. Clearly, there's been dispersion under the hood, but if we're starting to see private credit markets deteriorate, some of the tertiary credit markets like CCC credit and other tech-related credits that are far out the curve are starting to widen, then I think we're gonna start to get more of a credit spread widening to other parts of the curve. I think that's what Jamie Dimon's talking about. He also mentioned the consumer related parts, and there's we're starting to see some of that too. That's what the Citrini article mentioned too. White collar workers are are heavy homeowners, auto owners. Will they start to get more distressed? Will we see delinquencies rise further on auto loans, on mortgages? We saw student loans are clearly delinquencies are moving higher. So the lower part, we know the lower part of the K-shaped economy is struggling. If the upper part, or let's say the white collar part of the K-shaped economy starts to roll over too, then we have a much more serious issue on our hand. Credit markets will notice that, and that's how this becomes a 1 + 1 + 1 = 100 type of a slowdown. Which I think there's a risk of that. I'm not saying that's the base case, but there certainly is a growing concern that could be the reality that we're facing.
Are you, given what we've seen in bonds, because we have seen that yield come down, are you surprised that we seem to have Fed governors who are talking about maybe we don't need to cut rates? How do you square that?
Yeah, I mean, I'm not surprised. I mean, the 30-year Treasury bond, by the way, we're rolling over to the June contract, everybody, so be aware of that over the next couple of days. You could trade either one today that you want. But, the 30-year bonds are, they've rallied a lot and they've stuck, and we're seeing cash yields there about 4.7. 10 years followed suit to some level. A 10-year note has followed suit to some level as well. So it's the bond futures and the note futures, they both tend to kind of get ahead of the game right now. And I think that's the case. I think that they see the future a little bit better than the other markets. And right now it's these prices are pretty high right now in the 30-year bonds, and there's a lot of upside potential should we get another breakout above and beyond those November consolidation highs. So 30-year bonds are looking pretty strong right now.
Yeah, just Craig, last quick word on that in terms of what you're looking at with bonds.
Yeah, look, I'm surprised. I think the Fed minutes in January were more hawkish than I would have thought. I think there were several participants who would consider the next move to be a hike. Not that found its way into the statement or into the press conference, but there was some talk about how this could be something. Then you have Waller come out yesterday and kind of a modest hawkish pivot. Bostic was out this morning or yesterday talking about how if there's structural labor issues from AI, that's not really something that the Fed can necessarily address. And then Goolsbee this morning, kind of also talking about, I'm surprised that we're pushing further away from a rate cut regime continuing. And I think that's a concern. I think what the Fed is trying to say is, look, things are uncertain, so we don't want to be forced to move. But I don't know, under the hood, it seems like the momentum is starting to accelerate more, and the forward-looking outlook for white-collar work seems to be deteriorating. So I think the issue for the Fed is that as they push away from cutting rates sooner, then they need the bar for them to do it becomes higher, and so I think that's a precarious situation for risk assets here. If we're pushing away from getting that liquidity from the Fed to address the slowdown in the labor market, I think that's an issue for risk assets here coming in the coming weeks. I think Bitcoin is noticing that in some degree because Bitcoin needs liquidity, right? And so if we're pushing further away from getting rate cuts, there is no home for Bitcoin really in the portfolio, and I think that's part of the reason why Bitcoin trades so poorly is that the prospects for the Fed liquidity fire hose just isn't there right now.
Yeah, great flag, and great to tie in the Bitcoin performance. Fantastic stuff. Okay, it's about that time for this morning's Edge Report. Take it away, Jim.
All right, let's start out with the E-mini S&P daily candle chart right now. Right now, we're trading around that 86.56 level, which is pretty close to that gamma exposure one, that JAX 1 level. We'll see on the intraday chart in a second, but we're pretty much below every milestone I could think of. I mean, we have this November anchored VWAP we're trading below. We have the January anchored VWAP we're trading below. This fib line high to low that I have measurement here for the January for the calendar year, we're below the 38.1% retracement. The point of control here from a volume profile point of view, 68.79. We're below that, and then RSI as well, just kind of messing around in the mid 40s. But there's a lot of measures that we're trading below right now, suggesting that the bears are in charge. Intraday. We just made new lows. We're trying to rally back up. The official point of control intraday is 68.61, right by that session VWAP here. So those are starting to converge. But this is not like a huge retracement just yet. On the downside, we have previous session's low as a target, and that's at 68.32 3/4. JAX 3 is at 68.25. Should this thing turn around and we get kind of a bid in a rally, we do have JAX 2 up here at 65.75 and 0 DTE call resistance. That's kind of important. It's 68.80, and above that, there's not that many targets other than this high vol level at 69 even. Let's shoot over to crude oil. Crude oil is also a fantastic story. Great market to trade. Remember, there's micros here as well. This is in full force effect of a bullish kind of scenario right now. We're trading off the annual VWAP right now. That's in the rearview mirror for sure by now. The September high, 66.42. Forget about it. We've actually, literally closed above it once, and we wicked above it 3 other times, and now we're firmly above it at 68.66. So this market is definitely in bullish disposition right now. And look at that, RSI is sloping up ever nicely. So let's check out intraday charts as well. We do have some targets to the upside that have not been fulfilled yet. $67, 0 DTE call resistance, 0 DTE gamma wall, and a blind spot too, all wrapped up in one spot. 3 areas of interest right there. So we're just about there. We have the next target up is previous session's highs, and that's at 67.28. And above that, a lot of room to grow until you get to JAX 2 at $68. On the downside, I put that swing high level in there as well on my intraday, that 66.48. It's right by the VWAP here as well. So if we do get any kind of retracement, this is my line in the sand when we say, okay, we're not bullish anymore this morning. We might be bearish, but that's in the middle of the London IB there. We'll see if we get down there. If we do break bad and make new lows, JAX 3 at $66 is on my radar screen, along with previous session's lows way down here at 65.38. Remember, have your stops in this market. In particular, it is very, very news sensitive. Let's shoot over to the Bitcoin. Last but not least, remember, we're going to roll over to March pretty soon. We're still in the February Bitcoin. Now, we've broken out of this. This is a daily candle, everybody. We broke out of that consolidation level, right? We had about a 9-day consolidation level where the floor basically was around 65,500-ish, give or take a couple ticks. And then, boom, we closed below it yesterday, and we continue to drive below it right now. We have that swing low at 62.05 is a target. This is that swing low that we saw in February. Below that, we have that August 24 swing low, 49,795. I think Craig's analysis is right on point here. No room in portfolios for this at the moment. Let's shoot over to the intraday. We're trading below VWAP for most of the session. Sellers are in charge. No surprise. One-day min is on my radar screen, 62,275. And further down, it's the abyss, man. There's not a lot of targets down there. So we start making new lows, driving to that one-day min. We can go below the one-day min. Don't let that word fool you. On the upside, we have previous sessions lows, which seems to be in the rearview mirror now at 63,905. And then ultimately, Jax 1 frames the top of the conversation, this late night, I should say, last night, area resistance, and that's at 6,500. That is this morning's Ed Report. Back to you, Maggie.
Thank you so much, Jim. Appreciate that. Before we get to this morning's guests, let's have a look at the lineup for the day. Once again, it is a fantastic one. We're going to be talking with Danielle DiMartino Booth in just a moment, which we are so excited about. Later, T-Trade will be here for Tape Talk. Merritt, Black, and Chris will trade the open. We've got Jack and Nick for a tick for midday markets. And trading the close will be Leo, Kane, and Salma. So make sure you hit those reminders. All right now let's bring in Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. Danielle, good morning. Thank you so much for joining us.
Good morning, and thank you for having me. Boy, is it a busy, busy morning.
It has been a crazy morning. We were just talking about the Fed, so I wanted to ask you, so Kevin Warsh gets confirmed, if he does, then what? It almost seems like he's walking into a hawkish committee. And when Trump initially nominated him on January 30th, the market kind of read that as dovish. Now we've got Tillis openly blocking him in committee. Even if he gets through, the FOMC minutes showed that you had members almost discussing rate hikes. You had Waller yesterday kind of make a hawkish pivot there, at least for him. So how does Warsh actually move the committee if he comes in wanting cuts and the president expects cuts when half the table is, dug in on hold?
Well, so first of all, thank you all for having me today. And I think that the data are going to do the work for Warsh in the interim. I'm not too terribly concerned about his having to convince committee members, but rather to demonstrate to them that they're so far behind the curve that they're going to have to do some catching up in terms of easing policy. We have not seen the bankruptcy cycle slow. In fact, we've seen it really accelerate into particularly February. We had a private equity fund that was domiciled in Puerto Rico declare last night. And the trickle through to consumer finance, that's one of the reasons that we were watching, some of the financials, American Express. It's not just an AI situation in terms of why we're seeing breakdowns in these financials. It's also because a lot of their loan book is becoming increasingly impaired. A lot of the lending that supported those loan books in the non-banking sector, which Jamie Dimon spoke to yesterday and overnight, we've been reading his comments. A lot of this stupid lending is being called out right now. And the more stress we see in private that bleeds into public, the easier the pathway for Kevin Warsh. Because at the end of the day, when credit breaks down, the Fed is backed into a corner, especially when the bleed of credit goes into the real economy and continued layoffs emanating from those bankruptcies.
Yeah, you bring up such a good point. I mean, you kind of feel like you're living in an alternate universe, right? You've got the Fed talking about concerns, and then, we see AI worries steamrolling through sectors. Jamie Dimon talking about private credit. We know that's been bubbling. Do either of those issues seem systemic to you, Danielle? Is this just a sort of reckoning with the weakness that's already there? Or are you worried that, especially if they start to merge these two concerns, that there's something systemic in there?
So actually, I wrote an in-depth piece about the very prospect of a credit event and the systemic aspect of what we're looking at. And, we follow very closely at QI non-depository financial institution lending on a week-to-week basis when it's reported. after the close on Fridays, the Fed releases a weekly report. That NDFI, and I think a lot of people in our world know exactly what NDFI lending is at this point. That's a conduit. It's a conduit between the conventional banking system and the non-banks, everything in the private space. And that meaning they're connected. So if there's enough blowback in the private space, it's going to go straight into the conventional banking system. That's what Jamie Dimon is talking about. And that interconnectivity is exactly what creates systemic risk. That's why when in 2007, 2008, we had these bizarre German Landesbanks that I had to Google. I didn't know what they were, that were sitting on large holdings of US subprime mortgages, but we didn't know that. And so right now we don't know what exposure there is out there to the private markets throughout the financial system until we see more cockroaches emerge. And by the way, the cockroaches are beginning to emerge on the public side, in the public bond markets. And that again is where you see connectivity between what's in the shadows and what's right in front of us in financials.
And I want to move this over to the consumer right now. So we have the top 10 are carrying basically the bottom 90% of consumption. And you've made that the point repeatedly. The bottom 90% are what you've essentially described as a consumer recession. Now we've got delinquencies broadening across credit markets, auto loans, HELOCs, et cetera. And the wealth effect from equities has, been propping up the top tier. If the markets start to wobble, which they have started to wobble a little bit, does that transmission happen fast enough to matter this year, or is this kind of a 2027 problem?
Well, it's interesting you asked that question because the very idea of a liquidity vacuum is what we're seeing reflected in Bitcoin right now. And some of the comments that were being made prior to my coming on are very, very telling. And right now, it really is all about liquidity. Can you time a liquidity vacuum? No, you can't. But again, some of the things that we're seeing, when you see, to your point about the consumer, when you see what's happening in Bitcoin flow into what's happening with Blue Owl, and then flow into what we're seeing with Klarna. And then TransUnion comes out with a report a few days ago that says, some of the highest risk borrowers in 2026 are turning to personal loans. But the good news is, the interest rate that they pay is not going to necessarily be 28 to 30%, but only 24%. So we're definitely seeing stress, but the stress that we're seeing in the household sector, which has been bubbling for years now, right? We've been talking about auto loans being at, near record levels. It's flowing back into what we see in the publicly traded markets, whether you're talking about the private credit that, by the way, is funding the Klarnas of the world and funding some of the riskier lending that we've seen into the household sector. Again, they're colliding with one another. And that's when we look for that sound of silence. A liquidity vacuum is what I tweeted out yesterday, or whatever you call it. I X'd it out yesterday. Anyways, but that's really, really, really critical. And it all goes back to something that we can track 24/7, which is Bitcoin, which if it breaks 60 will be a very interesting dynamic. Right now, we're south of 63,000.
So Danielle, is there a policy response? And is it in the Fed's toolbox, or is this something that's going to land on Bessent and on the fiscal side?
So it should theoretically land in the Fed's lap. Financial stability is among the Fed's purviews. If financial stability becomes the opposite of that and we see instability, that is exactly what we saw in late 2018 when Jay Powell was forced into his initial pivot. And that had to do with the fact that liquidity dried up. We didn't have a single high yield bond sale in the United States for a record 41 days. And that bled into the stock market and forced Jay Powell to come in, guns loaded, and replenish liquidity in the system. And that's how credit plays out into monetary policy. Credit supersedes everything that we're talking about if you want to talk about the dual mandate, labor and inflation. And by the way, on that inflation front, Trueflation is telling us in no uncertain terms. And it's a good thing that it's now on the Bloomberg terminal. We can follow it closely. But Trueflation is south of 1% on the headline. It's at 1.28% on the core. We're not seeing pricing power in any way, shape, or form. Again, these are things that are going to make Warsh's job a lot easier. The less liquidity there is, the less liquidity flowing into the household sector, into the corporate sector, the more pressure you're going to see in terms of disinflation.
And you wrote a piece, The Paradigm Shift at U.S. Life Insurers, and this is kind of bringing this all into private credit and what we've been talking about, because life insurers have been buying private credit and alternative assets aggressively as they chase yield. So kind of describe what is happening. Is there a duration mismatch problem? How big is this problem? Is it credit quality? What's going on here?
Well, we know that there was somebody who was, making credit ratings out of their basement in New Jersey, and that these were given theoretical stamps of approval that were equivalent to S&P or Moody's or Fitch, and we know that's not the case. What concerns me is we see a lot of graphs running around on social media platforms showing us the circularity of AI financing and how dependent they are on one another to keep this going. What we don't see are similar graphs, similar circular depictions of what's happening with the insurers and how they're being funded, how some of the things that they're buying have been rated in the past. And that brings back up, Jamie Dimon's very good with words. That brings back up the idea of stupidity. But the insurance companies are enormous. And the private equity players now have insurance arms so that they can find new and innovative. Watch that word, innovative. Innovative is the most dangerous word in all of the financial world, all the financial ecosystem. When you hear innovation, you say, ouch. But that is what has been feeding into what we consider to be some of the safest financials out there, insurers that are not.
Yeah, gosh, this is where we just have the long shadow of GFC. You thought it wouldn't happen again, but just the lack of transparency, not understanding where counterparty risk is, it's such a concern. Danielle, just as we start to wrap up here, why, if trueflation is so low, if we know that the bottom K is struggling, now everyone's freaking out because maybe the top part of the K is going to face job losses. I mean, the warning sounds are everywhere. Presumably, we know the Fed reads your stuff. Why are the Fed members, and they're going to be more talking today, talking about maybe having to hike rates, or maybe, having to be on the fence? We're not sure. We need the data to come in. Are they just trying to show they're independent? Do they really know what's going on?
I'm not so sure the word independent is correct here as much as it's political. In 2008, Janet Yellen went on the record for saying that the Fed meeting minutes could be used after the fact to reshape market views. That's absolutely what we saw, with hints of several members wanting a rate hike. That was not reflected at the podium. It was not reflected in the statement, and it came right out of left field. That was political. It is political. They talk about inflation and the danger of inflation to be political. And I think until this situation with Lisa Cook, I'll be listening for her today. By the way, there's a lot of Fed speakers today. Only two of them are voters. That's Waller and Cook. Everything else you can just push into your noise machine. But I'll be listening very closely to the Lisa Cook. Tom Tillis is right to dig his feet in on the other matter, and that's criminal charges being pushed off on Powell. Until those two things are gone, and I mean gone, until the Supreme Court rules on Lisa Cook and until the criminal charges against Jay Powell are dropped, I think that this committee is going to remain outwardly political.
Yeah, it's so interesting because we always think of them being on the receiving end of politics, but the idea that they would be, what do you think the political message they're trying to send is? You can't tell us what to do?
The political message they're trying to send is we're going to disregard, by the way, dereliction of duty. We're going to disregard the data staring us in the face until you back down and allow our institution to be independent once again and not under complete total siege.
So interesting. Tracy, you got a last quick one?
Yeah, you were on Bloomberg Radio discussing sales and revisions, and obviously the headline consumer narrative from the bulls is consumers very resilient, but that might not be totally correct underneath kind of that headline. how does this kind of square with like the January hot jobs print? Was it, do you think that was a one-off, or what is it, what's going on with that?
Yeah, the January jobs. I think that was what Waller was rightly pointing to, and that is when you pull 130,000 jobs out of nowhere. We don't have enough time to talk about it. It was actually an abstract of a quirk in education and healthcare seasonality without the BLS having concocted 137,000 jobs out of thin air using a seasonal quirk. We would have definitely seen a negative print in January. Waller is a shrewd and savvy. He understands the data. He can see right through exactly what was done. And he was saying if January is revised away and we know that there were net job losses for all of 2025, which we do, and we know that net job destruction began in 2024. The real bad guys here, that's the National Bureau of Economic Research. You do not see job destruction and not declare recession when it is definitively reported as it was with the annual benchmark revisions. You don't see it. And yet they're quiet because they don't want to call out a recession that occurred that long ago. Shame on them.
Mm. Oh gosh, Danielle, it was so great to have you here this morning. Nobody's better at ciphering through all of this noise than you are, so we appreciate it, especially with all these Fed people lined up. Fantastic stuff.
Thank you for having me. I'll come back on anytime. This is great.
Appreciate it. Appreciate it.
Thank you.
Tracy, right before we started the conversation with Danielle, people in the chat were so excited to see her and saying sort of what a force she is. And she certainly is. And she just sort of cuts through. Washington's a tough place, and she always manages to cut straight through.
Oh, 100%. She's absolutely fantastic.
All right. Interesting. I just want to mention the polls really split in terms of where the market's going. So it's going to be a really interesting day. Tracy, we will see you in the chat. Thanks so much.
Thank you.
Okay, let's bring in to talk about these markets and charts. Let's bring in TTrades for Tape Talk. This portion of the stream is sponsored by the CME Group, where risk meets opportunity. TTrade, good morning. What are you watching today?
Good morning. Really a bit of everything we can go ahead and cover. I think we'll go ahead and start with Bitcoin because I know it's on a lot of people's minds, and we'll go over what we talked about previously, how I got to that, and what I'm looking for. So taking a look at Bitcoin, we're actually going to zoom out to the 3-month chart. And I was looking at this series of down close candles, in this case it's just one, to see if we got a reaction here, because this is where I was seeing if we're going to form a low in Bitcoin, I would want to see it right here. Or I'm looking for it to go take out this low, so right around 49K. So if we go mark those out on the 3-month chart, then go down to the daily, I was looking to see if we formed a low right here. And this is where we can do a little lesson on, the phases of price. Because if we want to see a low, we want to see that V-shaped reversal, or Bitcoin sometimes likes to make a failure swing and then trade higher. So I was looking for that as well. So you can see we do have a little reversal here, but then it's a consolidation, and you can see we never close over this level, creating a protected swing to then trade higher. So then that is why my bias right now and going into the end of the month for Bitcoin is to go back to these current lows around 60K. And then I'd want to see if we can get that continuation down into 49,000. And that's just because if we cannot form a bullish setup, I'm still going to remain bearish. So that is Bitcoin. And if we go to micro Bitcoin futures, it's essentially the same. I've just been looking at that on the spot chart. So that's Bitcoin. And then now we can get into some of what we talked about last week. And I can see Anthony's not here, so we'll go back to oil. And so oil last week, we were talking about, right in here on Tuesday, a move into this low, but we're still looking for that previous month's high. We go take out this low right here. We have a nice reversal, and then now we're into that previous month's high. So that is what we wanted to see. We just got this large consolidation prior to that. But now I'm still looking for a continuation from this range, right? And that's because if our green candle on the month is going to remain green, I just want to see this continue into the month end, which would be this week here. So taking a look, and we can zoom out here. What do we have for targets up here? And I can really use any previous month's high as a target. So I can just mark out these previous month's high, and then we have a bit to go for that target up there. Coming back to the daily, we could reach into these around 69 level this week. That's where I'd like to see. So, something like a 3% move would be likely for my idea on oil. And you can also translate that into gas and diesel. But both of them are doing around the same thing. You can see diesel has that target right there that I can reach into today. And if you guys have any questions in chat, feel free to just ask them. I'll take a look. But yeah, we'll cover really everything today.
T-Trade, I know you had some questions about currencies as well, which I think you were going to look at, right?
Yeah, we can go take a look at that. So we talked in dollar last week. If we could form a high right here, to then trade it lower. We do form a high, but it's not respected at all. So then it draws us into reaching for this high here. So now that we've taken out this high, this was bearish for foreign currencies. And I want to watch the reaction off of this high. And if you notice, this reaction is not aggressive, right? It's not telling me that price is reversing. So this is telling me that the dollar is going to continue bullish, at least into these highs. And then we can watch the reaction there. But if the dollar is bullish, that means what? For foreign currencies, it's going to be bearish. So then you just want to look at the foreign currencies and which one is the most bearish, right? And if you look, yen is always a pretty decent choice in terms of bearish price action. You can take a look at that. And it seems like I would be looking really at any of them, but the Australian dollar actually looks pretty good into this low here. So that's not a bad look there if you're looking for a bullish dollar. It's more so how I would trade this is it's a pretty short-term perspective into this high to be bullish. So it's more of like a day trade or a 1 to 2 day trade in foreign currencies. But then how we react around that is something where it's like I could close a position or swing it if I'm in something short on futures currencies. But look, with that, really none of them are a bad choice. Yen is already expanded, so I'd be looking at something like pound, euro, or AUD. I would say AUD is probably the cleanest there for me. But just bearish on foreign currencies currently. Now we can go over what we talked about a lot last week, and we'll get into that. But that was our silver and gold. It wasn't as nice, it wasn't as clean, but the whole idea was this. We have taken out this previous low, which is this previous month's low. And if we're going to form a reversal here, we'd want to see some sort of reaction, right? And we do get a nice V-shaped reversal. And then we get this move down. And I was talking about this move being fake, and looking to see if silver can form a low in here that would allow gold to trade higher. And if you look, when silver forms its low, that is when gold can start to trade higher into this high. Now we've had multiple days of expansion here into this high. So what am I going to want to look for in gold? Well, I want to see if we're going to form a reversal here to trade lower, or if this is a retracement into this gap here to trade higher. So if we're taking a look right there, I'd want to see, do we form a reversal in this area to then go back up into this trend, right? And so into the later part of the week, trade this higher. That is what I would prefer. I'd prefer this trend to continue up here. But really either thing can happen. We're just going to wait for the daily closures. Currently, this is bullish into or bearish into the previous day low because we have failed previous day high. So that makes me bearish into this previous day low. But yeah, so pretty bullish on metals, bullish on energy, and then bearish on Bitcoin. But let me see if there's any questions in chat.
Yeah, I think definitely people wanted to talk about ES and NQ as well. I don't know if you touched on them really briefly at the start, but.
All right, so if we go take a look at indices, it's a bit less interesting. So I'm still looking just because the monthly candle is bearish, right? It makes me bearish on the lower time frames or on the daily chart. I want to see if that can trade lower. Now you can see we're into a bit of a consolidation here. Now, if you notice, this is our consolidation high, consolidation low. And if you notice, we have taken out this consolidation high and closed below here. So I would like to see this continue lower into the later parts of this week. We'll see what happens. It's either going to consolidate or I want to see it trade lower. I'm not that interested in trading this to the upside, just because I'm viewing this as a reversal, and then I want to see this trade away. If it trades to the upside, that's just more of an invalidation style of trade. But you can see it's pretty interesting to look at the correlation because the Dow is starting to get some weakness. So Dow had the strength while, if you see, it was trending up while the other assets we're consolidating or starting to move lower. And then in the last day, it's starting to get that bearish price action. So I would be looking, we can go into the lower time frames and look at this if we want, onto the hourly chart. We just want to see if there's any price action in here that we can trust to trade away from. And right now there's nothing really. We do have a divergence between these two highs right here, but a divergence doesn't mean anything unless the price action supports it. So I would want to see confirmation below this low that we can trade lower. So with this, there's nothing really until open. But with open, I'd still be looking to see after we run this high, or if we can run this high out, can we form a reversal and start to trade lower? And then I'd be looking into the overnight lows, right? So this London low or into the previous day's lows. So I am bearish on indices. It's not the cleanest of price action, but it is what I would be looking for. Now, if we go and start to trade to the upside, that's just something I'm not personally that interested in. So I would probably be avoiding it, but it is something that could occur.
Mm-hmm. Did you already look at, I'm double duty and looking in the chat too, but did you look at RTY? Because people were asking about that.
Yeah, I don't normally look at RTY, but we can go ahead and take a look. So we'll just zoom out to the daily chart. So I always start on the daily chart. I don't really know what's going on unless I'm on that daily chart. And here's the interesting thing. So similar to the consolidation I was talking about, we have a little consolidation high here and a consolidation low here. We take out the consolidation high and then we trade to the consolidation low. So this is where two things can really happen, or actually not two things, but three things. We can either just sit here and consolidate and do nothing, and then now we have a new consolidation high and a new consolidation low, which is usually the least interesting and I don't like it. The other thing we can do is we can fail to reverse off this low here, and then we can continue lower, which is what I prefer. I prefer to break out of a range. I don't like trading consolidations. I want to trade trending price action. And the other is that a reversal can form here and we can trade higher. Now, how do you determine which of those is going to occur? Well, you kind of have to watch the price action on a lower time frame around this level. So if you look around this level, right, we do have a nice reaction off this low, which tells me price could be reversing here, but we just have a consolidation. So now we're back to the same thing on a lower time frame. We have this consolidation. Are we going to form a reversal there and trade lower? Are we going to, form this reversal here and trade higher? Really, this is where I want to see open form and let some more information get formed on the chart before I decide. And sometimes I even let this next daily candle close to let me know what's going to happen. But right now it's not in anything I would want to be trading, because I like to trade the price action that's trending like this. I don't want to be trading this. So instead I would be waiting, and sure, if we get in towards the open and price looks like this, that's quite bullish to me. But I would just be waiting for the open to kind of confirm or deny my bias. And if I don't really know what's going on, I'm just going to sit and wait. So RTY is not super interesting to me, but it's more so just waiting to see what's happening and going with the trend. I don't really have too much bias here on the lower time frames. And I'm seeing a few people ask about copper, so we can go take a look at that.
I was just going to say that.
Yeah, so
back to copper.
Copper was interesting because on the daily, I was wanting to see if it could break out of this consolidation range after it swept this low. And I think this is the last time we talked about it on NinjaTrader. If we look, it's somewhere around then. But we don't get that, right? So we don't get that continued price action. We actually form a little reversal here and then go back into the range. So now if we just clean up the chart, we've hit this previous high on the left and we are just consolidating. So really this is not that interesting for me unless, I'm selling options. Just because it's consolidating. So it's something I tend to want to avoid in terms of buying. So I don't really have too much here other than, if we do close the month like this, then I can really just see how the next month opens. Do we open, we trade lower first, then higher? Or do we open, do we trade higher first, then lower? So here, it's something that I tend to avoid. Now, if we just look at correlated assets, I am bullish on the other metals. So that tends to get me to favor an upside move here. So I would be more so interested, waiting until the end of this month, seeing this as a reversal here, this low can hold, and then I'd want to see the next month open, form its wick low, so it looked like this, and then trade higher. So that's what I look for, more of a long-term perspective on copper. I don't have too much intraday or on a daily time frame for that, because this is just not an area that I want to be interested in. If you notice, we have the consolidation marked out and we're sitting directly in the middle of that. That's where I would take losing trades. So that's where I just don't watch price action.
Fantastic. We're almost out of time.
Yeah.
Someone said, T-Trade, you really do a great job at explaining things. And I think we can all get behind that statement. It's fantastic. You're super clear on
Yeah.
sort of what you're looking at. I appreciate you breaking down the process on that.
Yeah, and then I was just going to take a look at some energy stuff. Natural gas, not super interesting here. This is just what happens when we have a super large expansion, right? We just get a consolidation that follows. So that's why one lesson you can learn from this is use the higher time frame candles. So that can tell you when expansion is over as well. We have this expansion on the daily. We open up a new monthly candle, and then this is just consolidating and retracing. So if we are going to get a new move on natural gas, when would I want to see that? On a new month open, so into March. If March doesn't do anything, then I'd be looking into April. And so that's what I do, is I just use the higher time frame candles to tell me what is going on, right? So for instance, if we're just consolidating or retracing here in December, if we do get a move, when would it be? Well, January. And that also helps because it's a new year. So you can use the same thing on the yearly or any time frame of candles. So
Awesome stuff.
yeah.
T-Trade, thank you so much for that. Appreciate it.
Yep. So I think we're just basically finished up there. I hope you guys learned something. If you have any other questions, just make sure to ask them in chat, and I'll hang out in chat after my stream and answer a few of those.
I appreciate that. And it seems like the sort of mood is a little bit split. I mentioned before, and the poll's not really changing. You're some are bullish, some are bearish, some are neutral. Little bearish winning out a little bit, which is kind of where T-Trade was leaning as well. And we've got a lot going on. We have consumer confidence. We just mentioned we have a lot of Fed speakers. I know you're watching that leading up to the State of the Union, which Trump is all about the Fed and is going to be talking about the economy. But we've got this situation where the Fed, we'll see if the Fed speakers kind of reiterate what we've heard from Goolsbee this morning and Waller before, that maybe March is in play, but that seems really at odds with a lot of the risks that Danielle DiMartino Booth was just explaining to us. If you missed that segment or you were trading through it and couldn't really pay attention, go back and watch it again, because she had a lot of really great things to say in respect to that. So we're going to trade the open with Merritt, Black, and Chris now. All right. Hi, guys. Great to see you.
Hey, Maggie.
How's everybody feeling today? Merritt, how are you?
Living the dream. Yourself?
I'm doing well. What's on your radar? What are you watching, especially after everything you just heard?
I will take the other side of T-Trades and the poll. I am bullish the S&P. I think that the S&P, where it's been consolidating, is important. And I don't have actually, I could pull over a different chart here and just give you a little.
I like having a little bit of a two-way opinion.
Absolutely.
Makes it interesting.
We'll get a side bet in the chat or something. Would be good. Save on commissions. So, this is a daily. This top left chart here is a daily bar chart of the S&P. And one of the things that I look at is, how value adapts. Okay, so 1 standard deviation above and below VWAP for the year. So we're looking at last year. Here's the big sell-off. We traverse back across value, and then we start to trend, right? We're holding above value, pullbacks holding above value. And that brings us to 2026. This top dashed line here is where last year's value high is. And so far, the S&P is accepting, as Chris and I talk about, it is holding, it is building value above where value was last year. And so for those of you who are kind of profile auction market theory, you'll kind of understand the concepts behind that. I don't have the time to teach it right now, but where we're holding is important. And so it's consolidating. We can all see that. We've been sideways since December. But where that's happening is important. And so I'm looking to buy the lower edge of ranges and use some of the lower time frames to pick spots. I was not ready to trade yet, but I wish very much that I was long from current low of day. We'll see if I get a second chance entry or something, but I will be looking to execute long on the S&P today, unless we start to break down significant levels.
Yeah, so interesting. I'm glad you threw that out there. Chris, what are you thinking about? Where's your head?
I agree a little bit with him. We are consolidating here for NVIDIA earnings. We are failing to move lower. This is the 4-hour chart. Yesterday we attempted a breakdown from the highs of this consolidation. We attempted lower, we took out prior day low, and then so far we have reclaimed and consolidated back inside the range, which could be, as Merritt says, acceptance back in the range, and we can then traverse all the way back up. NQ has a better picture of that, much healthier in due to the strength that we have in the semiconductors. We did reclaim this prior range, and we're consolidating a bit higher here. So I do agree with him that we can push up. For NQ, I can see 960, 25,000, this range of resistance once again. And if we go above that, test the Sunday's open, and then if the strength persists, 25,110s. But I also do think that we can have a more bullish to neutral day as we anticipate NVIDIA earnings and maybe save that expansion for that event.
Sure.
Great stuff. The chat's buzzing, and people super appreciative of all the info. And so I'm going to hand it off to you guys and let you carry it through the trade. Good luck today, everybody.
Thanks, Maggie.
Thanks, Maggie. Take care.
So you're not swing short anymore? I was rooting for you, man. Once I came out, of course.
No, I closed it. I don't remember where I closed it. Let's see. Yeah, I don't remember. Probably near break even, a little bit under.
Really? That's shocking, man. I thought you were primed and just getting bigger.
No, because I wanted the price to not reclaim this 960, 25,000. So as we started to creep back up there, I said, no, let me take it off and then wait. And just, I just know that we're in this range until NVIDIA earnings. So I want to be respectful of that and wait to then position myself better. Because I do think as well that we can go higher if we have positive reaction from NVIDIA.
Sure. I mean, that's got to be one of the biggest, hottest names, right? I mean, the market will certainly be hinging on that.
I mean, it's day 8 or 9 of this range. Almost 2 weeks. So either we go to November lows or we go back up. But you think we're going up. What is your target area on a bounce?
Oh, I mean, it's on the time frame that I was discussing, because I could pull up a 1-minute chart and have a totally different view of, on that chart. But the daily chart, that yearly value, that thing that I brought up earlier, it's all-time highs. It's 7,200 S&P. It's way up there. I'm not a huge targets guy. Sometimes I have very clear likely destinations, and that's often when we're traversing a value area. I'm looking for the opposite extreme. I have a really clear target. When it's a breakout trade, like the S&P is, it's what we call a breakout pullback from last year's value. There's no target. There's no upside. It's just, does it develop into a trend, and then can we trail a stop appropriately and take as much as we can out of that, all-time highs, opposite. That's the opposite extreme of the consolidation, obviously. So
yeah, look at you.
Plenty of options.
A true trend follower.
But what's really interesting to me, and it doesn't make any bearing on my analysis. It doesn't make me do anything different, but the NASDAQ is in a totally different position. The NASDAQ's consolidation has started to become very apparently back inside last year's value. It's holding below last quarter's value low, right? So it's a breakout mode to the downside. So it's just really interesting to me. A lot of times the S&P versus the NASDAQ from a NADRO long-term VWAP kind of perspective analysis, they're similar. They can have like subtle differences here and there and whatnot. But this is pretty starkly different in terms of where these things are holding relative to some prior values. It's interesting. Be fun to see how it plays out. But again, no bearing on my analysis for that.
All right, how's everybody doing today?
Yeah, morning, chat.
We're so close, guys. I think 188 subscribers. Let's start off with the like this morning, please, to help out the network. Subscribe if you're new. If you're not new, hey, share it with your neighbor.
Go knock on their door.
Say, hey, neighbor, have you heard of NinjaTrader Live?
Remember how we talked about crude oil getting to that 66 and tagging that, then the consolidation. Now we've gotten the push up above 66, and that's kind of holding so far, kind of from Thursday of last week onward. Crude oil is consolidating above that 66, which, by the way, why did I call out 66 months ago for crude oil upside when we were trading at 55? Value area high from last year. So the crude oil move is a traversal of last year's value, and now it's starting to hold above. So that's going to be a good spot to watch to see if crude's got more in the tank there. If it fails below there again, I would be very neutral that market and not want to be swing long. Curious how Crudele's doing. I know he started talking about crude was going to be the theme of 2026 and energy, and that's what he was saying early last year. So far he's been right about that in crude. So I'm interested to follow his positioning and what he's doing there. Hopefully he's crushing it.
Yeah, energy, top 3 sectors this year, as far as like equities.
Mm-hmm.
It's metals, materials, defensive sector, and energy. Chris, did Merritt get that check in that royalty check in the mail? It was sent, but knowing him, he gave me probably the wrong address.
Hey, check's in the mail.
I never see. Okay, so he didn't give me the wrong address. You never know with him. He is nice to me on the stream, but you guys don't know how he is off the stream in the Zoom chat before we go on. You should have seen the message he made earlier. He said, turn off the camera. Nobody wants to see you.
You shut your mouth when you're talking to me.
So I'm here.
I'm here. I'm in it.
Yeah, this hourly chart is, I'm sure this hourly chart here, it's just a messy range here, 8-day range, almost 2 weeks. But you know what? Yeah. We did reclaim this 780, 800 area last night, and we back tested it from above. We then created an hourly wedge in NQ. And so, but right now we're sort of in a range from 780s to 880s. We can break out of this. Guess where we're going? 960, 25,000. I think for the last 2 weeks, you guys have heard me talk about that 960 nonstop. It's been a great location here for trades. So that's the obvious target here on a move higher and follow through above 880s, 960, 25,000. If we have continued strength in anticipation of NVIDIA, then we go see the weekly open. Fail the 780s, 800 bull bear zone, which is the zone here that's dividing this range, right? Bullish above, bearish below. Guess what? We go back down to 700, 650s, prior day low. So my focus will be on looking to see if I can capture the move away from this multi-hour range that's developed overnight, either higher or lower. NQ much stronger this morning than ES. Yesterday was the first day where these defensive sectors actually came down quite a bit. Industrials, financials are well below 200 MA now in a bear market. It's a very split market here. I don't want to point any fingers, but
Please.
I just blinked twice, guys, so you should know what that means. All right, let's see what we get.
Jeremy tried to seduce me.
15 minutes.
The painting was a gift.
Tracy,
I plan on
Mom,
taking it with me.
meatloaf.
They don't make movies like that anymore.
I know.
They were so good. I watched Dodgeball like a few weeks ago with my girlfriend because she's never seen it. Oh my God.
What is it?
Dodgeball.
Oh.
Nobody makes me bleed my own blood. Hey, that's awesome, Parker. Nice rejection here from the range resistance that we're in. All right, so here's that little range that we're in. 880s, 780s or so. If we're gonna stay in here, then no trading for me. But the AES has the range from 868, 872-ish to 68, 40s, 50.
What do I use to determine daily bias? I use 4 different VWAPs, the yearly, the quarterly, the monthly, and the weekly with standard deviations. And I kind of use a top-down approach going through those time frames. And then I use market profile to look at where value is building, where there's balance areas, essentially looking for consolidations, but with using market profile. And then I kind of synthesize all that into one conclusion and come up with a few different potential scenarios based on where the day starts to trade, where we open relative to those areas, and then where we start to accept above or below those areas. And then I use order flow and things like that to help me execute and pick good turning points and find good pullbacks and fade edges of things and stuff like that. Well, another sapien. If my thesis was holding last year's value high of 67, 69, then that changes if we accept below there. So we would need to either push far enough below there or get just below there and spend enough time below that reference to then turn bearish against that reference. You're welcome. You're welcome. Ba-dum, ba-dum, da-dum, da-dum. Great question. If you could only trade with one unit, Chris, how would you take profit?
One unit, how would you take profit? I'll let you go first.
What I always recommend is wherever you would traditionally like to take that kind of first scale out, that's just the one where you got to come flat. I think that for, if you're trading one unit, then by design, you're probably, developing and trying to figure things out and get there. So I think paying yourself a little bit sooner is better. So take where you would, if you could scale 3 times to be flat, then wherever that first scale is, that's where I think you should just exit. And then as you do well at that, with that higher win percent, because you are scaling sooner, if and when you do well with that and you get to add that second unit, then guess what? Now you've got that initial scale point that becomes a scale out, and now you can hold a core position or a runner or whatever you like to call it, because you've earned the right to kind of do that and to go for those bigger wins. That's always my advice on it.
My answer was going to be, I would create a setup where I would enter in a location that it would be a mean reversion setup that would allow me to enter at an extreme and then look for a 1.8 to 2R multiple from that and work off that first and then do what Merritt says. So I think at those extremes, you can get more than 1R, but just trade nothing but that setup. I mean, you don't have the luxury to trade up multiple ideas with one contract. You have to grow your account first.
My sister's in labor. Excited to welcome the new little guy.
I hope everything goes smooth and a healthy
Thank you.
transition.
It's her third. We're good. Third kid. Poor kid.
Just gonna let the kid run wild then.
That's right. Full feral.
How the two turned out. Hey guys, Ninja is running a giveaway this week, all the way up until March 2nd. So you guys keep an eye out for that. Sign up. They'll put it in the chat right now. And get ready to enter, and good luck to all of you. Anthony will be announcing the winners on next Monday. So good luck. If you win, don't forget about us.
Don't you forget about me.
Nice rejection, nonstop lower. Let's see how we do it when we come back into this. If we come back to the 780, 800 support.
If you already have a lifetime license, Anthony Crudele himself will personally deliver Crudele's pomade, where you can only find at NinjaTrader. He will personally pomade your hair with his bare hands. He will just rub it through every fiber.
Every single one has to be perfect.
That's right. Oh, man. You know what I want? There's a lot of wants in the chat. You know what I want? I want that hat that's behind Crudele sometimes.
Hat?
There's a hat back there, man, and I've asked for it 10 times.
What is it of?
It's a NinjaTrader in on it. I think it's like one of those like partially mesh, back. Like, what's that called? A trucker hat? What is that called?
Yeah,
I want it bad.
Yeah. It's not the ones that we have. It's a different one. Do you have the NinjaTrader hat?
It's different. Yeah. I can't wear the hat that they gave us. I can't wear it. It's just not a style of hat that I'm able. Like the hat that you're wearing, I can't wear that style of hat. It just doesn't. It just doesn't.
It's too small for you, for your head. I totally.
Exactly.
Totally. You really want to make sure the hat that you wear fits, if it's a larger head,
Yep.
it totally makes sense.
Yep.
Mm-hmm.
Huge.
Mm-hmm.
Well, today's my lucky day. They're giving me another shot at this long from this location that I want. I really hate the way it's from yesterday midday up until now. It's like kind of like a bear flag type of deal, but I'm gonna be buying them no matter that. For a serious note for the chat, we've been goofy today. If a certain time frame being in a bear flag is not a part of your process for putting a trade on, then okay, you might observe it, you might note it, but you've got to remove it from your mind. Be like water. Water can crash or water can flow. A lot of stops lurking below these areas, but I'm in. There was a little bit of momentum shift, a little bit of buying on the tape. The sellers are super weak as we've pushed down into this area. It meets my parameters. It's from the trade location I want. I'm Bruce Black. It's like one of those moves where they're looking for the rug pull into the open, like a low volume, super low delta pullback that just keeps going on low liquidity right into kind of an event or an open. That's what it feels like. Momentum shifts I look at on price. And so I'm out of this trade for a little 3 points as the momentum shift failed.
From one side of the range to the other with no bounce.
Mm-hmm. Look at them flushing it. Now they took out that little low.
Let's see what we get here. We did reject at the daily 9MA. So if we cannot reclaim that here, if we cannot get above this range resistance in ES and NQ, then I'm still looking for lower prices. So let's see what we get here at the open.
Order filled. Order filled.
I tried it quickly there on that momentum shift. It's going to be a little dicey around here.
Semiconductors are so strong. They're helping NQ.
Bit of a passive seller on the open, absorbing some buying. Now it flushes. What you laughing at, Deli? Was that the pomade gift? Are you a little bit behind on the stream? A lot of stops right below here. They might whoosh it. It's a technical term.
Let's see how we do here. The daily picture in NQ does not look bullish at all. We just rejected from the daily 9MA, acceptance on the prior day low, and that gets me really just bearish to look for February's low.
Still more stops lower. Just not going to make it easy. Look at this poor low from yesterday on the profile. It's just prime for getting ran through there. So we have a momentum shift here. If you notice, I'm not buying it. TTrades, we sell off 20 points in the first 3 minutes of the day, and you're taking a victory lap on me. The night is young, my friend.
He forgot to change into his burner account.
Could almost scalp this short here, man. Probably got a nice little 8 or 9 points in it.
That was a big rejection off the range highs. We did break the range lows. we are coming into this cluster of support, 650s, prior day low, 700. That's the last line of defense. If we lose that, then I do think we're going to see this big breakdown. But it's just so hard to put on a swing long or short, I mean, right before NVIDIA earnings. Wow, what a gap down in Broadcom. Let's see if we get a relief bounce here. VIX is non-stop higher.
Just missed it. Used to be an easier trade.
I mean, this ES daily chart look just very bearish here at the moment. Ever since Friday's fell breakout, Friday we put in a fell breakout of that 4-day range. We tested a huge key level, rejected. Yesterday we saw follow through lower. We're still in the range, but you know, Friday's fell breakout is good information on daily chart. And if we are able to lose here, I think we can get through a relief bounce. I don't know. I don't think we get a large directional move here before NVIDIA earnings, but it's possible. But I would say this ES is ready to break down. Cyclicals, a little strength behind them. Industrials, a little bit green. The Qs, weak. I mean, to me, the Qs, this is acceptance at the bottom of this range here. Let me show this. Here are the Q charts. Consolidating right under the 20 EMA, the 50 EMA. You know, if we can't bounce, if NVIDIA can't save us, this has a date with November lows, the 200 MA. But until then, we have to be, I have to think that we're in a range-bound market from prior day low back up. Let's see. We have a divergence here. ES just took out prior day low. NQ did not.
I'll look to scale some into development value area low right here.
Oh, no good setup for me here. I am interested in a reversal with you, but this is a strong bounce already to where I would wait for an entry. All right, really good reaction here, guys, from ES taking out prior day low and NQ didn't. So if ES can reclaim and hold the 68.43 area, then Merritt has a push up into 68.68 once again. No 2-minute 9 MA entry for me. You guys know I am looking for a low to be put in, bounce into the 9 MA, and then reclaim that. This is a strong bounce to where my entry rule is not met.
I'll take off another right there into VWAP.
Fantastic. On the second try?
I've probably had about 4 trades.
You guys see how he remained focused and executed regardless of the small losses that he was going? Like, he was aware of that. He had the intention of, hey, I'm okay with these potential losses because this is an area where I'm looking to really enter and execute on. That's a good lesson there on execution and conviction in what he's looking at, guys. Beautiful bounce. No entry for me.
The MEA, if you want to know what I saw down there or whatnot, you know, go back and maybe later, if you want to stay live with us, that's cool. But go back later and just watch the recording. You know, watch when I was talking with Maggie. You just watch the whole evolution of seeing the thought process and my plans and things like that. But
Hey,
down at the
Merritt,
lows, I mean,
what did you
it's
see
not
down
rocket
there, by the
science.
way?
It's just momentum shifts off of an extreme. I tried it 3 or 4 times and got lucky on this one. No big deal. Just executing the plan.
Ice cold. Hey, post in the chat, W Merritt bias.
Oh, I forgot about that. Where you at, T? Where you at, dog?
Oh, guys, just found out the giveaways are starting today. They are giving away 5 lifetime licenses. And like Merritt said, I guess he had the insight. Daily will be giving away some sort of hair product. So every hair follicle is positioned the right way. Okay, that's very important in trading. If your hair is not on point, your trading won't be on point. Okay, so make sure you sign up, do all that good stuff. Subscribe. I think they said also subscribe. Jim. Beautiful bounce, guys. Just give it up for Merritt. Fantastic long down there. My entry rules did not appear there where I was looking for a bounce. Remember, I talked about that 650, 700 cluster of support. Where did we come down to? 700. And then from there, we bounced. But there's no 9 MA lower high for me. I need to see a bounce into the lower high to the 9 MA, and then use that to enter. So, but at least we see this is a very good fill breakdown, right? And then now I can use that to guide me for my next trade idea here, which would be, hey, can we form some acceptance at 880s, look for some consolidation, or maybe we backtest 780, 800, look for a higher low, and then look to position myself. But beautiful fail breakdown here. And this can actually trigger the move back up all the way to prior day high, because it is through failed breakdowns that trigger larger moves. So we'll see what happens here. But so far, we are continuing to get a little bit more confirmation that we will be range bound going into NVIDIA earnings, something that we have discussed. So it should come to no surprise at why we're bouncing. Hopefully there's no surprise here. I mean, it's been very obvious for the last 2 weeks what we're waiting on. It looks like, I would say we have the IB low set already. and the IB low was set first, so that's a bullish. Now we can get some acceptance up here. Then I'll look for some continuation long. Beautiful breakout though. Or reversal, sorry, back up. A lot of strength too. Are you just gonna trail this? Or I don't know if you closed it all. Oh no, you're trailing it, huh?
I haven't moved my stop. I scaled up here at what we call developing value area high. So, I scaled development value low, I scaled VWAP, and then I scaled development value high. And yeah, I mean, this final piece, I'll give it a really good shot to run quite a bit higher. And as I was saying pre-market, the S&P could really go.
Yeah, just beautiful.
Enjoy it,
reversal,
1980
guys.
vol.
I gotta change this.
My only regret is that same guy that was trolling me last week as I was buying that bottom and got a couple hundred points out of that he wasn't here today to troll me as I was taking a couple stops. I haven't forgot about him. I think about him all the time. Day and night. Day and night. Mm, 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 mm.
Beautiful, beautiful reversal.
There he is. Why did you come out of that swing long if you were so confident? There he is. That's the guy. Well, I think don't delete it, guys. It's great. It's good stuff. Let him call me names. It's fine. Don't delete it. Why did I come out of the swing long? Well, first of all, let's go back and look at where I came out of the swing long. Right? It was around here. 68.90s, right? So we're still 15. I could buy it right now and be 15 points better. And I saved all this adverse excursion. I talked about this ad nauseum with some students and traders, but this market tried to settle into an uptrend and it failed. In fact, I scaled, but right before I went to bed on this night, whenever this was, right around here, right before I went to bed, I actually scaled some more of the swing. It made a little push higher and then failed as I slept. And so by the time I'm at the desk again the next day and we open and I get this is kind of like a chance for me to get out. This is my same DVA structure as I always use. This is just on a weekly time frame. We've failed to maintain an imbalance up, and I use this as a way to come out of it because we were hitting resistance on multiple time frames, things like that. So that's why I came out of the swing. But hey, now I'm in from 68.30s instead of from 68.90s. So great questions as always, Shapcap.
All the way up to 960s without any pullback in NQ. Let's see if we find some resistance here finally. This is the first range resistance here. Let me show this higher time frame chart. NQ back after putting another failed breakdown here below this support. We are bouncing back up into 960, 25,000 area, which has been resistance. Acceptance above here or at this level, then we can see prior day high, of course, that Sunday breakdown, weekly open, and then 25,000, 110s, 120s. Let's see if we can get a good back test of this 880s now.
Whoever was saying check my DMs, I'm not sure what DMs you speak of.
Oh, you have multiple? My bad. My bad,
Oh,
player.
oh. I like that name, though, Brer Rabbit. I think what I'm not going to get into it. There's some controversy over those stories, but I grew up being read those stories. I never thought anything was weird or whatever.
All right, a little bit of rejection of this 960 in NQ. Don't forget this 960 25,000 range is the major resistance of this almost 2-week range. That is what we need to break out and hold in order to see prior week highs. So we have a really good fail breakdown this morning, all the way back up to the top of that range. Now, if we can get a pullback, some consolidation here, look to engage. Yes, much weaker. It means a lot of strength in the semiconductor space. Mags are bouncing a little bit. Cyclicals are weaker now. And good example here, guys, of Merritt executing on his edge. I had a similar idea down here. This was a support area that I was looking at, but just no entry model for me. And, you know, I'm rooting for him. I have no FOMO. So you have to be okay with missing moves if your entry rules aren't met, however you define them.
Absolutely. That's as good of a lesson as whatever lesson there could be from me being in a decent trade here. There's been plenty of streams where you've caught a really nice extreme, a little break. Typically, I love a lot of times when I see you take some of the little breakout failures and things from edges, and there's plenty of times where you get in those and I didn't have an entry point or whatnot, or I had a different bias that caused me not to look for that pattern as an entry. Great lessons all around. That's right, cold down. This ain't Pokemon. You can't catch them all.
Would love a little bit of a deeper pullback, back test this overnight range here at 880s and see if we can get a continuation from there for another high to reach that 25,000 area. So we'll see if I can look for something there. Yeah, close to 200,000 subscribers, guys. Now, if this a healthy higher low here doesn't form, can we move back down to like the mid range? Yeah, it would just mean that this was most of the move for this morning, and we'll stay inside the IB high, IB low, and consolidate and really go into a range inside this morning high, morning low. But, there is a lot of strength here. So it makes me think that we can't see another push, at least. We'll see. But that's a classic fail breakdown, guys. If you don't focus on a lot of those, I would say to really consider them because they happen almost daily. Fail breakdown, fail breakout. That's really where that daily wick, the wake of that candle, the highs or the lows are made. You have this large body candle and then small wicks. Those are the fail breakdowns, fail breakouts. So if you look to identify where those can show up consistently, prior day low, London low, overnight low, right? Prior week low, then you can start to spot them and apply your own set of entry rules and engage with that structural reversal that sets up on a weekly basis. All right, we're pulling back here. I want to see if we can hold this 880s, 9 MA. If not, it would be funny if we just go back and create some sort of range like this.
Wouldn't surprise me.
Yeah, and we just do something like this, which can happen here. So far, the first higher low is coming in place here. We're back testing 880s. Let's see if we get a reaction. ES is what ES has to hold is the 68 area. A little bit weaker. It's not holding at the moment. So that one's confirming a little bit more of a range. We have on the Qs, not in Q, on the Qs, we have a double inside candle. So we're consolidating inside Friday's candle, which means additional contraction inside this 2-week range, right? We're getting really tight here and gives you an idea why we can also be in a little bit of a range inside the IB high and IB low. We're to the 20 EMA here. The first high low failed. Yeah, ES much weaker.
Quite the 30-minute candle, but we've seen a lot of those lately.
Yeah, look at that.
Remember our stream last Tuesday? How high we ripped? Like I was initially long, and then it just came crashing down even harder. You caught the short from the top.
Yeah. This is a spot where we need to hold to get a bounce. If not, this can go back down. Yes, it's really weak. Yeah, no. All right, back to the midpoint. That just take me out.
Yeah, what do we got here? Consumer confidence in a minute.
Yes, was not able to hold 68.68, moving back inside the range. Look at that, back down.
News is out.
So it did not hold where it needed to hold to bounce. Hey, thanks, Wine. It's going to come back down all the way to your entry.
Joe Tangle. Find myself taking profit, rebuying, reselling the rest of the move. Any tips on getting the confidence to let it run? I mean, there's always going to be a reason to have a lack of confidence, or maybe even a reason to have overconfidence. So I would try to get away from any type of focus or recognition on confidence for trade management. You don't need confidence. Again, there will always be a reason for you to doubt things, whatever the case may be. Someone you respect, someone you have no idea who they are in the chat, whatever. Some price action pattern. Like, remember when I was first looking at the longs, I was like, I don't love the bear flagginess. I don't love the 3 wide pour low from yesterday's profile, but I need to try these executions. Anyways, what you need, my friend, is process. You need a objective process for managing open trades. And then you make in order to come up with that process, you need to make some choices. You need to pick a lane. Do you want to go for big runners? You don't have to. You don't have to go for big runners to be a great trader. Make that choice. It's a niche. It's a style. What do you want? What do you dislike the most? Right? Watching a trade that's in open profit come back and stop you out, or watching a trade perhaps go without you, that you had trimmed, that you had cut because it looked weak, and it goes without you then. What do you hate more? Well, design your system around doing the opposite of those things. And then you also mentioned something, or someone did, about leaving points on the table and how you don't like that. Trade management will never be perfect with the benefit of hindsight. Yeah, sometimes we get lucky and we, catch the low and exit at the high or whatever, but that's not the goal. It shouldn't be the goal. You shouldn't just always look in hindsight at what the chart did and say, oh, I should have held it. Oh, I knew I should have cut it off there. No, you have a process which is designed by you, like I was talking about, according to that one that suits you. And then you execute it relentlessly. My process is a better trader than I am, is something that I tell myself all the time. Adopt that. It's not about confidence. It's about being processed. It's about having a process and being process driven in your approach.
We're at the midpoint here from the lows and the highs.
Yeah, this is no man's land here for me. Middle of developing value for the session. Middle of, if we look at the profile, what has happened today on market profile? We open, we run down, and we run stops through the poor low yesterday. Then we run across yesterday's value up into these highs. And now we just reverted back into the meat of yesterday's balance and trade. So really chop city at this point, no interest at adding or managing or doing anything here. I like kind of a low of day stop. I could move my stop up a bit here. I don't need it below the low of day. Here's the second standard deviation at this point. I could really give it plenty of room to kind of potentially tag that worst case scenario. So that's a good song, Blue Shark. What was the name of that band? It's a funny named band. It's like something something wheel. Stuck in the middle with you.
Jesus, grab the wheel.
It's something wheel, I think. Steelers wheel. That's right. Thank you, Kick Puncher. Clowns to the left of me, jokers to the right. Here I am, stuck in the middle with you.
Is that it?
I don't know. I couldn't tell. No, I've never met Lance. I have not. His days at SMB was after my days at SMB, so we didn't overlap at all.
All right, so we came down halfway from this morning low, morning high. ES is back in the range, so that one's really needs to reclaim 68, 68, and then hold above to see significant higher. NQ did not go low enough to test that 800 zone again, but now we're trying to bounce and see if 880s can be reclaimed, which was the overnight resistance range. If it can, then we start building some structure up here. And then from there, see if we can form a little bit of acceptance and break out to new highs. If not, we might just be inside the IB high, IB low, and have a true tight range day.
Wait on earnings.
Yeah. The Qs, I did share that earlier, has a double inside daily candle contraction. And this candle being the tightest and smallest. So, makes me think if we're going to have a daily doji candle, then what can the intraday action look like? Well, we probably live inside the IB high, IB low and stay in this, how many points? I don't have that.
For me, it was looking at an RTH only chart. It's a balance area from February 12th. And the value area low of that is 685, and the value area high of that is 965. And guess what? That's today's range in NQ, pretty much. So it's balance within balance, right?
Yeah, unless you have a long like Merritt from the lows, it really, And unless if you're scalping, you have to wait until this range resolves.
No tiene por qué serlo si tienes un proceso y una estructura. Solo tienes que seguir tu proceso, como dice Merritt. Mi proceso es mejor, pero que yo.
What?
¿Qué? ¿Qué
Hola.
dices? ¿Qué dices? Dime.
All right, NQ's trying. We put in a deep higher low here at the 50% mark. See if we can develop a wedge here. Yes, back to that 68 area.
One of my best friends in the world lives right outside of Madrid. I've been to Spain many times.
I don't live outside of Madrid. What?
Nice try, pal.
I know I can speak Spanish, but what? All right, let's see if we can consolidate a bit here. Give me some structure. I'm looking for a wedge contraction here now. Yeah, my ancestors are from Spain. My mom is light skinned and has green eyes. I think it was adopted. Hey, welcome from Argentina. Hola.
They really liked me reading that Spanish.
Well, I'm
Got
down
the
there.
chat going.
I'm down. All right, so we put in the lower high here of what can be a wedge. And now I'm looking to see if we build this wedge structure here, form a little bit of acceptance at 880s, and then have a move away from here. Yes, back tested that 68 range resistance from the overnight session and rejected. That's really what has to be reclaimed in order to push out higher to the recent high and maybe 68.93. Its key level is 68.93, 6900, the yearly open. Major level. So far NQ is consolidating here. ES, the same. It is a little bit weaker. There's just more strength in tech here as they anticipate. Daily doji candles in the SPY and Qs. And Q as well. ES, a little almost flat on the day on the RTH session. Or no, not the RTH. ETH. Yeah, who doesn't love a good carne asada? Mary, you next month? That thing, you going?
What?
Are you going next month?
Yeah.
Awesome. I'll see you there. And
Looking
bring your
forward to it, my
pet
man.
with you, please.
What?
I want to meet. Bring your pet.
I told you, man. I put him in a little box. I poked some holes in it, and I mailed him to you. I'm getting worried about the little fella.
I don't know what happened, but you know what's funny? I did notice that on my neighbor's wall there is now a statue of that. So maybe he got lost. You'll hear about it soon, Kite. All right, so we have our higher low. This wedge structure is building up nicely here in NQ. Not that interested in ES. Consolidating here in NQ. Let's see if we can continue to hold and then attempt higher. So far, we are building good structure here at 880s. Wow, what's going on here? Memory stocks, huh? Memory stocks not doing well now. SMH at all-time highs. All right, so if this wedge here fails back down, then hey, guess what? We're going to be range bound, then we go back down to the bottom of where we came from. I think this year we'll make it out there. It's a good area. I hear it's a good area. Yeah. We'll try the tacos over there. Definitely not in
In
Nashville.
Nashville?
No, definitely not in Nashville. Maybe that's where you have like hot chicken and some, what else? You guys have good barbecue now?
Sure. I mean, we're not we don't claim to be Austin, Texas with their brisket, or like Nashville's not like that. Or Memphis, is like a barbecue town, but we're really renowned for our tacos here in Nashville.
Oh yeah, nationwide. All right.
We have overtaken Vegas as the bachelorette capital of the world.
I thought Vegas was more like a bachelor sort of area, not bachelorette, really.
I mean, I
I
think
didn't
it's
know that,
both.
Scott.
Yeah, I've never been to Vegas, but yeah, yeah. North Carolina, also good barbecue.
All right, we are consolidating now. ES showing a little bit more strength now. We have some love in cyclicals. Oh yeah, look at RTY bouncing up. Industrials, home builders. Semis are weak now. See if I can
Is it possible to remove wick from the bar and have only small points visible? I don't know. I'm sorry, I don't understand what that means. What small points? You talking about my algo dots? Actual prices. I mean, these are just high-low close bars, and they're not candles, but you see the actual prices the same. It's just a different way of plotting.
All right, so I took long the wedge break here. Trying to take faster partials. Did not fill me. Hmm. All right, just took half off, right under 1R. See if we can break out to new highs, make get above a IB high. So we got a little bit of what I was looking for, guys. We hit that 960 zone, which I said was the key level. We pulled back in below 880s. However, we did find a higher low at roughly 50% from the IB high below. We then consolidated, and it's the acceptance, the structure that I look for acceptance is a wedging structure. And you can see we formed that here perfectly. We have our swing high here, our swing low. We bounce to create a lower high. We trace, create a higher low, bounce, and then trigger the breakout. So I got long that breakout as that for me confirms acceptance of the 880s overnight range resistance. I took partials right under 1R, and I financed my risk. I'm still concerned, not really concerned, but I'm still looking out to see if this becomes a failed breakout because we can remain in a range. But because I finance my risk, I don't need to worry so much about that. I can just trail the rest if we do see a breakout higher and price decides to go above 960 into 25,000, and then the weekly open at 25,000 and 30. So that would be my upper range if we see continuation higher.
A lot of questions here. Did I add on any retracement? No ads here. Like I kind of talked about, zero interest in the trade location that we've been in, either at the highs or back in the middle into that. Remember when I showed the profiles, the bulk of yesterday's trade. So no interest in any ads. Another question. What time range do you use for your IB? Because you obviously don't use the standard one, Chris.
No,
How
that
long
was a
is your
good
initial
question. The IB high and low has not been set. And it's usually the first hour, is it not?
Yeah.
Yeah. It has not been set. So yes, clarification on that. I keep saying the IB high and low. Up until the current point that we're seeing the price action, I know it has not been completed, and I know we don't have maybe the IB high set, but I'm just sort of using that as a reference as to what the high and the low is. So clarification on that. Thanks, guys.
And then they're asking if we use limit orders or market orders. I'm almost exclusively market orders. I will break, when I'm trading larger, I will break orders into smaller chunks, but still use market orders. I'm almost very rarely using limit orders on taking profits, actually, which is kind of rare. I think a lot of people set targets and try to get those limits filled. I prefer to look at reactions and just bang out with hotkeys with market orders when I want to take some risk off. Chris, you enter with market orders, right?
I would say 65, 70% of the time I do. 30% of the time I'll do limit orders.
Okay.
Then the next question here is, how do I look at all the different market strengths? I can look at a screener, but I just type in the ETF and I go to it. And I'm just, I do a lot of different equity sectors. I look at them, and so I kind of know what's happening, and I just need to glance at it.
What's
something to improve on?
Jinx.
Growing a beard, maybe. I could use some improvement there. Well, I need hair to come out first. That's a beautiful continuation here.
For me, and I was actually just talking with some traders about this yesterday. Personally, I have been doing, I think, a poor job of muddying the waters at times and giving myself just ultimate discretion in terms of managing swings versus managing intraday trades. And look, I want to continue to give myself permission to get into a scalp, and hey, it could turn into a swing trade. Obviously, if I'm taking that approach, it's gonna be a super, super discretionary call as to whether I do that at the end of the day and hold through the close or not. So that's not going to be able to be changed unless I start going into a drawdown or struggle, in which point I go really, really process driven instead of allowing myself really, really high discretion. To get back to your question. So one thing that's happening with that is kind of the context for you is that a lot of times I'll kind of be 1 foot in, 1 foot out on a swing position. I know the swing potential is there. And embarrassingly, I've kind of put myself in that position here today. It's difficult with the stream because sometimes I manage an account off stream while I stream in addition to my stream. Today, I actually just kind of took it easy and just traded the stream account here, which is a small account. I think I have like 12K, or I started with 12K in this account. I have 16K in it based on the P&L today. So it's a tiny account that I just stream with here. So that's another story altogether. But the thing that I'm working on that I did not do a good job of today is getting really, really clear on when I see the potential for swing and making sure that if that trade is successful, that I am swinging it. I'm getting a little too wishy-washy, a little too 1 foot in, 1 foot out. Oh, maybe, order flow's not looking good here. I'll just come out. So that's something that I'm working on getting better at right now.
All right, we're above 960s. We're into that 25,000 area, but I'm watching to see if we go to that 25,030s. Tag that. And see if I can hit my next partial here. All right, the IB is set. All right, just took more partials off here at 3.2R. I'm going to move my stop now to break even. And I'm going to continue to trail the rest and see if we can make it up into prior day high. But, while I missed that reversal from the lows, I shared, hey, I want to look for some consolidation now, acceptance at range resistance. We got it. And then I was able to participate in the continuation of that, having no FOMO from that earlier reversal. You can get multiple setups a day. I did not capture in my larger account though, so that's a bummer. Something I want to be in. Back to the top of the range for both ES and NQ. ES is at 93. Between 93 and 6,900, that's really the main resistance of this almost 2-week range. NQ is above 960s. That is very strong action above prior day high, and we need to hold that. But above that, we start really moving significantly higher.
EW Trade asks, hey, Merritt, I've heard you say, quote, avoid fading imbalance, end quote. Do you ignore that when fading edges of higher time frame balance like this morning where your intraday imbalance was in conflict with the balance you're fading? This is someone who understands NADRO, who understands what I teach. This is a fantastic question. Boy, I'd love to exit this trade right now. So there are levels. How should I begin? The ultimate form of trading NADRO is a ton of intelligent compromise, a ton of smart bending of the rules. The best way to begin trading NADRO is exactly the quote, do not fade imbalance. So there's beginner development, and you need to first be unoriginal. You need to really, really, really be process driven. You need to have zero intuition because your intuition sucks. It's just going to make you lose money. You need to be very objective about what you're doing, very rules based. As you start to do well, you earn the right to layer in more discretion, to start to bend some rules, to start to get a little more advanced with some of your tactics and deploy multiple different tactics depending on the situation. So that's the answer to the question is what I was doing this morning was absolutely in direct conflict against the basic standard don't fade an imbalance. I'm operating at a higher level of discretion than the standard beginner NADRO teachings. So great question. If you have a follow-up question on that, please put it in. Be happy to elaborate on some of that because it's important. What you guys are doing and learning and attempting at this point on the learning curve is not the same as what you're doing at this point on the learning curve. It's not the same. Development, if you were to come to me and say, Merritt, teach me how to play golf, right? What we would do on day 1 and day 2 and week 1 and month 1 and month 6 is not the same as what we would do at year 6, right? And trading development is the same, but nobody wants to admit it. Everybody wants to find the magic thing and be successful and do it tomorrow. Nobody wants to master the fundamentals. If you want to master the fundamentals, that's what we're all about at Apteros, and we will teach you and show you great fundamentals of trading so that you can then become your best trader.
No, Jude. Merritt said he would teach me. In the meantime, guys, hey, let's get those likes up. We have 425 likes, almost 1,200 of you watching. Let's get those likes up. Great commentary here by Merritt. I'm just tagging along. Happy to be here. And providing good analysis on structure, execution, or both in winning trades. I think that deserves 700 likes. What do you guys think?
A small price to pay.
Yeah. Subscribe if you haven't. If you're new, welcome.
All right, so at this point, I would feel comfortable. There's some risk to doing this, but I would feel comfortable moving my stop. Essentially, for the first time, I know, there was kind of an emergency stop that I have initially, and then I kind of moved it up to the kind of near low of day. It didn't need to be below low of day. Once we're way up here, it's fine. I just wanted it below the second standard deviation. At this point, I would like to go to something that I call kind of like a medium leash on the trade, not a super tight leash, not a loose leash. If I was going loose leash, the stop would remain, and we could go all the way back and remain rotational at these lows here. I'm going to go medium leash, and I'm essentially going to kind of say like the 6870 region. I really wouldn't want to see something below there at this point. I really want to be flat badly. I have internal conflict. I want to be flat. But as I told you guys, I didn't do a good job of. I didn't, I know that the swing trade potential is there. I really am not sized in this position, so I really, it's just not the same. So I kind of want to treat it more like a day trade, and that's probably what I'm going to be. That is what I'm going to do. I'm going to treat it more like a day trade, like an intraday position trade. So we'll see if we can hold a trend. We'll see if the delta continues to give a positive signal like it is and has been. But we've traversed the weekly. I don't have a ton of expectation that this thing will just continue ripping higher from here. When you think about anchoring VWAP to the balance, you're fading to avoid fading imbalance. Well, I'm certainly looking at that, right? So not a technical anchored VWAP, but I ad nauseum today talked about the balance for the year. So we're still in the first quarter. So the VWAP for the year and the quarter is the same thing. And when we look at the quarter, where's my trade location on the quarterly? It's essentially from what? The -1.5. So I am fading a rotational market on that time frame. We were at below the -1 on the monthly. My trade location is from the -1.5 on the weekly. But yes, to your original question, I was fading something of an intraday fast trend. Now, what did I say when we came into the open, though? I was saying this feels like, I'll try to quote myself. We could rewind the tape if we need to. I said, this feels like a low volume, low liquidity. What word did I use? Something about a stop run. I forget, shakeout, something like that into the open. That's what I said that was. And if you look at the delta, there was a bit of a passive seller that showed up after the open at some point here, right here, I believe. But there's just no aggressive selling. Delta was actually started to drift higher on this weak selling into these lows. So that allowed me to continue to execute, as well as after finally seeing the stop run through the poor low on the profile from yesterday. So yeah, on many time frames, I was perfectly by the book using a DVA, a VWAP. It's not anchored because I don't use anchored VWAPs. I just feel like I don't need them. I have so many other VWAPs to use. Hope that helps.
If we do pull back a little bit here, we want to see that the 960 holds. Right, we have our first high here. We're pulling back into the first high low in the 2-minute. Let's say maybe we do go a little bit lower, test 960s. Maybe we continue higher, but we'll see. It still is good action, but we still have NVIDIA earnings, and won't be surprised if we come back down. We almost tagged that 25,030, which was the weekly open. And right where we broke down from on Sunday, we did test that yesterday at the open. We had a strong rejection. So it would be a change in character if today we do not reject back down from there. We hold above 960s. We form more acceptance up here and then move towards prior day high and then 25,120s into that prior week high area. You can't see my position. It's right here. Oh, the screen is split. Here, I'll do the smaller one so you can see this. Or this one. I think you guys care more about the dollars, huh? That's too chunky. I like this one. The dollars don't matter. What matters is your R's. Could it be safe to take a long if it pulls back to 920? I don't know what you define as safe. like to buy into an area. Is it safe? Is it safe in here, guys?
It's never safe.
Your rules have to be met. 920, I don't see anything at 920. 920, the breakout of this wedge, sure, but I rely more on the horizontal areas of support and resistance. 960s is a key level, major key level, right? We tested it this morning. We rejected, we reclaimed it. Now it has to be support on a back test. So to me, 960 is more important than 920s. 920s is a very short-term support area that was formed at acceptance of 880s, which was the overnight range resistance. So
remember when TTrades took a victory lap on me at 9:33 in the morning?
yeah, where's he at?
Where you at? He's been awfully quiet. Tried to dunk on me 3 minutes after the open. Who do you think you are? I am.
W Merritt bias.
If you guys haven't seen the "Who do you think you are? I am" clip, you just immediately got to go Google that. Incredible. Incredible piece of sports lore. All right, I'm flat.
Bring him back in here.
There he is. There's my guy.
Here's Blitzy. Hi. Huh?
Who's a good boy? Who's a good boy?
What happened, guys?
Who do you think you are? I am.
Hi, morning. Morning. Yeah. So oil's down. What did they say about the war?
Oh, I think it's just,
Pretty flat.
Iran is rolling over, I think.
Yeah, Apple's strong today. Apple's just in a multi-month range, like everything, but looking healthier. Haven't traded Apple in a while, since like November.
Yeah, and by deal, I think we mean you guys want this the easy way or the hard way? I think they're taking the easy way this time.
$519 of you have liked. That's awesome. But what about the other 700? Where are you guys at? It was a great sesh. I think we both approached it from our own approach or analysis.
Well put.
executed differently. Both had similar ideas, both focused on different things. That's a good stream session for you guys.
Mm-hmm.
Help us out with the likes, subscribe. Thanks, Sunshine. NVIDIA's back up, and hopefully it's ready to leave this range. It's been consolidating since August.
Let's check out NVIDIA. See what we can do here.
They're Aussie doodles, Jay.
Reminds me of the
That box, huh?
The S&P, but stronger, right? Like it's better excess on the lows. These highs are pretty vulnerable. But then we got this guy. But yeah, that's quite the probably pull this back here. Something like that.
Yeah, guys, look, likes help out the network. They allow the network to be front and center as far as like shows that are on the YouTube at this time. Zero drama here, just maybe some back and forth between me and Merritt. It's because he says things like, I created these words that you speak.
Hey, don't start with me.
You get me? I can't just let him get away with that. Who does he think he is?
Oh, yeah.
So get those likes up. Help the network out. This is trade entertainment. Is that how you say it? Tradertainment.
Are you not entertained?
Nothing to do here, then it's just see if we can hold up here and push out.
Okay, I've never gotten this one before. I remind someone of one of the original A-Team characters.
Ooh.
Wow.
Let me see here. Are you that background actor in the fight scene?
The what?
The background actor in the fight scene?
I don't know what you're talking about.
Murdoch? He is not. No. Yeah,
Mr.
Merritt's a
T
good
Black.
teacher.
I pity the fool.
Yeah. I don't think I've ever seen an episode of the A-Team. I watched like a little bit of, you remember that channel called TV Land? It might still be around. It would play like the older shows. I watched a little bit of older stuff, but I never watched.
That was in your time.
Yeah, I mean the
Don't
A Team was before my time.
don't include me in your time, buddy.
When was that show? Was that in like in the 80s? When was that? 70s?
I don't dividend.
80s.
You reminiscing the 80s? What's going on here?
I was born in the 80s.
I pity the fool.
Pity the fool.
I pity the fool.
My little sister watched Rugrat. No. See, we didn't have cable TV growing up. We only had the what do you call it? The rabbit ears, the antenna TV until I
Where
was
you get like
probably
13 channels.
Yeah, literally, yeah.
Yeah, I had that too.
We got like direct TV when I was in, I don't know, 8th or 9th grade, something like that.
Yeah, I didn't have any of that until I moved out. It's just the rabbit cables.
We got a pre-color TV person in the chat. Color TV.
All right, looks like we're gonna get some sort of pullback. ES failed at that 68.93. 68.93, 6900 is that major resistance. NQ hit that 25,030s. Wow, right on the dot, which was that next target above 25,000 that I was looking for, the weekly open. Pulling back now. Do we now create a range stay inside the completed IB high, IB low? But as we back to 960s, I'm looking to see if we can hold that and then maybe attempt one more high. If not, I'll move my stop under there and I'll get out of my runners. But it was a great time with you all. We are at close to 600 likes, guys. We can get there. All right, let's get to 600, 20 more of you.
Good morning. Good morning.
Good morning.
Hey, morning.
What's up, fellas?
I'm always unprepared when they throw us on a little early. I'm like, oh, it's 10:57. Is that 11 o'clock yet?
I know they did me dirty one time like that. You guys in trades?
Yeah, I actually just got long a whole assortment. I was long this morning. I took 2 trades to target the NASDAQ, 1 to target in the ES, 1 to target in the Russell. And then I just got long Russell, NASDAQ, well, MES and MNQ. So we'll see here. Just set a timer for 25 minutes and probably going to be getting out of it. I'm thinking one more pump higher, hopefully. Otherwise, I think we could easily just trade back into a range day if we don't continue up from here.
Yep.
Yeah.
How'd you do, Nick?
I had a scratch earlier, but I'm making it back on the short from the top ropes. Shocker. As usual, I just seem to, at this time of day, just seem to find that reversal off the secondary move. No, I got long too early. I was trying to catch this in like the 720s, 718s, and just got like steamrolled like with two stop outs. So I hadn't gotten back in until this one. So missed the whole move up on the exact thing I was kind of looking for, which is unfortunate.
Are you winning, son?
Trying our best
we're all
here.
winning. All right. Well, my time is up. I don't know if Merritt wants to stay here and chat it up, but you guys enjoy your sesh?
You actually have a minute left, Chris.
Oh, I have a minute left. Contractually obligated to stay. So how's the weather over there, guys?
Oh, it's getting clear blue skies, baby. I'm enjoying it. I'm enjoying it. Me and Nick got this though. You guys enjoy your day. We'll take it from here.
Good luck,
All right,
fellas.
guys.
Enjoyed it,
Go,
Chris.
take care. Enjoy your sesh. Chat. See you guys in a few days. Take care.
Later, boys. Jack?
I don't hate your short here.
I don't either. We had a decent build starting to form there. I honestly, at first, I thought I was getting baited into this because of the MGI that's still sitting above there, given that we have the week open and the previous day high, and we didn't take them out. So I was like, they're going to bait me into this short and then just run my stop again, and then it'll roll over because I'm not being patient. Like that's how this short kind of felt. But we fell back inside IB. We started to kind of lose this node, and unfortunately, I was hoping we'd get like 960s and at least fill one of these. But so far, it's being defended, which I don't hate a rebid off the 960s, but I thought we might just go a touch lower. Come on, sellers.
Yeah, below this, my next level, the Nasdaq would be a 943. And the ES would be 76.75, but I don't know. We'll see if we can hold this. I know we're opposing each other right now, but if this isn't moving in the next 10 minutes, I'll be getting out. I'm actually bigger than I want to be right now in the Russell anyway, size wise, but I had a couple padded winners here this morning. I just come up with those levels from the chart. Use the chart, just use, levels we broke up. I use, closes for value gaps. Time cycles. This Russell, let me bring it into view here, but this Russell long, this is what I call a return to the scene of the crime. So anytime you have a breakout, and it just fails immediately back, I just look at the level we broke out of. It's a return to the scene of the crime. This is where this breakout started, and we just literally went right back to it. But I'm using a multi-target strategy here. As you can see, I have 3 targets. This is about to hit my first target here, and the NASDAQ, that kind of lightens up.
I just got scratched out of that.
The pressure.
These jerks.
And then there's that first target there in the ES. Trump speaking out whenever he's saying it's.
Well, that's why I got scratched. I was typing something and I looked and suddenly I'm scratched out of this. Oh, that's a bummer. Got 95% of the way to my first take profit. So probably should have just whatever, man. That's been how this day's gone. We're still going. Okay.
Got my handy dandy timer set here. I don't know if you guys can see that. There you go. It's 21 minutes left. So when I'm in trades, I just set timers to keep myself aware of how long I've been in a position. And in this specific instance, I mean, the faster it moves my way, the better, the more comfortable I feel.
Luke, I know you say no offense, but I'm taking offense. I trade very different style. Appreciate it. That was nothing more than me not managing a 40+ point trade. It's very simple. It bounced off where it should have. I just kind of was being you thought we might come back to this large order that was sitting here. Just tap this 65s, which is where my take profit was. So it's all good. Scratch trade.
Better than a loss.
Yeah. Got 2 of those to show for this morning anyway.
Yeah, really volatile open here. We're on trade the close yesterday, right? Like we had that swing pump into close. I was actually biased. I got long a little early, got stopped out, and then took it again on the 10 o'clock pullback. I was able to get in, but I got in those morning levels, and man, we went through the prior day low in the ES. Nice divergence between the indexes this morning. ES taking out the prior low of the day. NASDAQ held it. Russell immediately started bidding, and it's still holding more aggressive sequences here. Maybe it comes back in. Yesterday it was leading the weakest market, and it was interesting to see, just the way it flipped back up here today and took us higher. Well, it's not that it's taken us higher. It's not that big of an index, but it, on a percentage change basis, was moving. I did not catch the YM. I didn't trade the YM today. Too much going on. 3 markets right now. Four is good when I'm entering him at different times of the day, but basically just took 3 entries at the same time. I don't think I'd want to take 4 because it's just an extreme amount of risk that to take all correlated.
All right, so it's now the moment when we're gonna make a new high of the day. Which what just happened? My whole computer decided to shift its layout. So 1 second. That was weird.
I'm in the market for a new laptop here soon. I just really never know how much I should spend on a computer. I'm like, really? Like, should I spend $2,000? Should I spend more?
Yeah, I don't know. I bought mine in my PC 2+ years ago. I still have an Alienware laptop that I really don't even use.
Yeah. Yeah, I got one of those too. The one I'm streaming on, Ninja, is probably 4 years old. It's old boy. Been around the block.
I mean, I guess I technically just bought a new computer, but
Yeah, ask yourself what you want your computer to do. I want my computer to trade for me.
I have 2 really good computers. Like my MacBook Pro is like overkill for what it ends up being now. But at the time, I thought I was going to be running my own streams via software on that and then trade through my PC. So I thought I would need something more robust, but
yeah.
Now I just have a Mac Pro with like whatever 48 gigs of RAM for no reason.
I feel like you need the RAM more than anything.
I don't disagree. It's just like I don't like use it for anything. Like what's really running? I'm running Chrome right now. I have TradingView up on the Mac, and that's basically it. Discord's up there. But other than that, I mean, I'm not really using it to its full potential. And I got a Mac Mini to do all the AI stuff that I've been doing and building content and stuff, like just completely just siloing that from everything else. All right, let me get my share back because that died. There we go.
Profit target goal on NQ. Do you mean like target as in this trade, or like the amount of money I like cap myself at, or yeah, I mean, I don't know what you're saying yes to. Target on this trade. Okay. Well, you can see it's up at 25,000. I have one at 56 quarter and 67.75 are the 2 targets on my screen. And then I had a target, I think it was around 2,500, which was about 30 points. I've been using 3 targets, 1 close, just kind of get that reaction off. And then just two looking for higher highs, basically. And then pay attention to how long I'm in the trade.
RAM costs as much as computer these days. Yeah, that's one of the reasons, like getting a Mac Mini with 16 gigabytes of RAM just to run something a little separate is like, and getting it for $400 was like a hell of a deal. I looked at because my Alienware and I upgraded the RAM in that a couple years ago to 64. That same RAM that's in that thing, I could just sell the RAM for probably like $800 right now.
Wow. Who would know that was the best trade of the year? Just buy some RAM.
And I looked, I'm like, I paid like $179 for it for the 64, which is crazy.
Yeah, I bought I have a 64 gig laptop too, but or RAM, whatever. I bought it right before, maybe a couple months before those prices really boomed. And I have not looked at laptops since.
All this so Nick can just make white fan AI videos.
Yeah, did they come for you yesterday?
They did not. They've left me alone so far, but remains to be seen. I'm going to keep releasing things. But speaking of releasing things, if you were living under a rock this morning when Jim had alluded to it, we're live and social on every single major platform now. I mean, NinjaTrader Live has its own social channels. If you have not already added them to your Instagram, your TikTok, I believe X too, everything across the board. And to celebrate this, we're giving away 5 lifetime licenses to NinjaTrader. There it is. There's the plug.
Hey.
So you can enter via that link in the chat for this giveaway. A lifetime NinjaTrader plan. I've already done my job and followed those accounts.
I'm gonna have to do that. I looked at the NinjaTrader Live Instagram the other day and didn't see any action. I wasn't even sure who owned it. I think I DM'd it. I was like, who owns this? Let's see. I'm gonna give it a follow right now. Oh wait, So it's NinjaTrader and NinjaTrader Live.
There's 2 now.
Okay.
NinjaTrader Live now has their own.
The NinjaTrader Live guys. We need some posts.
Oh, don't worry. Don't worry. That team's going to be working hard behind the scenes.
All right. NinjaTrader. Cool.
Think about how much absurd and useless and also very good content we can provide them in any given day.
Oh my goodness.
Oh, perfect. So yeah, you'll see the official launch and more posts coming soon, starting next week.
About to pump into some new highs here for the ES and NQ. Targets in the ES right now, I got it 6902, 25,056, and 67 for the NQ. And then a Russell first target at 26.55.4. So let's get her moving before my timer goes off and I have to reevaluate.
There's the week open tag at the very least.
RAM has increased in price due to demands via AI. I think particularly video processing. But don't ask me. I don't know anything about computers.
Yeah, the RAM prices are increasing because our lovely friends in the chat had to just keep making AI videos of Kane eating tiramisu.
I haven't seen that one yet.
You guys and your usage, just frying GPUs to make that stuff. But we did just take out previous day high in the week open, so let's see if sellers want to show us anything or if we are officially so back and Jack, you and I are going to be stuck in this trading range every Thursday morning for eternity.
Please take us to we might be at 420s by Thursday. I think we can get a touch. The question is, are we going to short it? Might as well for like old time's sake, you know?
Yeah,
just for the rhythm. You're not opposed, are you? No. I might just limit it with like a 50-point stop and a 50-point target just for the heck of it.
I mean, if you guys want to see what Jack and I are kind of joking about. This is the last 4 weeks. And Thursday was like us basically trading in the same area. So like Thursday was like here. And we came down, had that violent Thursday, and then we were back up, and then another violent Thursday, and then we just are continuing to kind of contract in this balance range. So joy for us. Hopefully we want to leave eventually. Jack, explain your magical, mythical, proprietary, fancy indicator.
So this kitchen timer, which I've programmed, it's very, very exquisite technology. This the amount of calculations that go into this. I literally just keep it set for 25 minutes. I have them laying all over my house. I'd send you an affiliate link. You got to drop my code SUT for startup trading on the Amazon. So I get my affiliate commission. But if you what I do is I set a timer for 25 minutes. And either when I'm in trades, I don't try to make a decision based on every bar. I'm kind of making decisions like in 25 minutes. So like from these entries, like 25 minutes, like it's going exactly how I want us to see. We're above the recent high. I feel comfortable. Now, if this trade was in a different circumstance, like we had traded lower and like kind of gotten close to my stop, and then traded back up, and 25 minutes later, we're sitting around my entry, I've probably just taken the trade off because I don't think that entry is that good. And it could just be the market's not ready to move. Whatever the situation is, the reality is if we've gone nowhere after my entry after 25 minutes or haven't completed a first target of mine, I think my entry's poor and I'll exit the trade. So you can get these on subscription. I can mail you one to your house every 30 days. We got stopwatch. I got all sorts of weird gear. I got one of those bar counter clickers. This is if I'm taking a lot of losses, I'm like 1 loss, 2 loss, 3 loss, 4 loss, 5.
That hurts. Hopefully, that makes the loss hurt more. I feel like if you have to.
I gotta make myself aware. Like, don't be losing trades, dude. If I'm taking stop out after stop out, I'm like looking at this counter like I'm playing golf, counting my strokes. Also, just great. I know you love fidgety Nick, so they're great little fidget toys. So like, for example, if this Russell starts kind of moving back to my entry, which it's bid my way, but if it gets back to my entry after being in the trade for 25 minutes, which I got about 5 more minutes left, I'll probably just look to exit it as opposed to continuing to hold the long. Love Captain Hook. Great movie. I trade MGC occasionally. I saw I was getting slammed earlier. I haven't looked at it yet today. The thing is, if there's enough, I like the indexes because they're like correlated, so I can kind of judge which one's stronger, which one's weaker, and then if the Nasdaq's the weakest, and I think we're in shorts, I'm going to be shorting the Nasdaq. Gold doesn't really have that. I mean, you have like silver, but silver and gold can widely deviate. I mean, today silver's up 1.6% and gold's down 1%. So versus like the indexes, you got the Russell up 0.8%, NASDAQ 1%, ES 0.6%, and the Dow 0.8%. So if you're favoring the long side, maybe look for the strongest market of those four.
What's gold been doing today? Just trending down all night, slowly. Boring.
How do I determine strength? Percentage change, which markets I pay attention to 5-day and 10-day percentage changes, or 5 and 20-day, and then on the day. So it's like what market's up the most on a percentage change basis. It's like pretty simple. I don't overcomplicate it. You can look at bars like ATR expansion bars. So we're coming back to my entry here in the Russell. So I'm just going to get out of that for a few ticks.
Is this the point when it finally works this short?
Could hold, but I'm already long 2 other markets, so I'll just continue to hold those markets as if I've already got my first target off in those, so my risk is reduced.
Hmm.
And there is my timer, which is notifying me that I should make a decision. So my decision I'll make now after that is if we move back to my entry, I will just close the trade. So I don't have to think about it if it happens. I've already made the decision. It's just acting on it.
CL, I think everything you just said in that statement is probably one of the many reasons why we're still going to continue to be stuck in this range-bound absurd market.
Yeah, well, you can blame me.
NVIDIA, State of the Union, tariffs, and God knows everything else that, from a macro perspective, that could change us on a dime. And with Anthropic randomly just deciding to cause the single demise of every individual software company named slowly, you never know. I said this though, like whatever, 2 weeks ago. I was like, it's not the death of software, but some of the more niche specialist players are probably going to have a bad time. But there's a massive debate, and even as simple as AI can do, there's still just a lot of differences of build versus buy. Because even if you build this thing or you have these tools into it, you're still building everything from the ground up and going through layers upon layers versus having companies that are very specialized and able to support a very specific set of use cases and industries and things, and they've built teams that are experts in this. Like that's the weird stuff that's like, yeah, you can still teach it and make it more individualized for a specific brand or organization, but that's still like a heavy lift and a lot of thinking and developing and iterating versus like something that kind of just works. You pay for it and go. So I don't know. We'll see. Yep. Luke, that's how I see it. I think the ones that can find ways to integrate it into their products is what's going to win. Where, still the end business application type user can suddenly feel like an engineer inside of their HCM, you know?
Yeah, I'm kind of I'm a bull generally in this price action. I don't think Nvidia is going to break down the market. I think Nvidia could be. We've been basing on this higher time frame support for quite a while, and I think the asymmetric trade is to the upside, and those are the news events that just make the move happen. But the accumulation is already going on. And you can see it in a day like today. I mean, yesterday really failed to get that new low, morning drive, pullback bid. We're not like all the days of sell-offs, even if you look at like yesterday, it's just a sell-off and then a stall. There wasn't like really like another leg down. We triple bottom, the old triple bottom in the indexes. And then, let's just seem like this morning, there's no more new sellers below that low. I would say moving forward post NVIDIA, I would say worst case scenario, there's a fake out to the downside. My daily support level is 24,420. And we've had one test of it in this range and higher lows since then. It's 3 a.m. up in the morning. Who is that?
An HCM is like Workday. SAP has one. A bunch of the more legacy companies have them. But it's like that kind of back end HR systems, payroll, talent management, all that stuff is an HCM. But that type of business application user, let's say you give them the power of some of these models in their software that a developer could have without having to need to know how to code. So a no code type business application layer that lets them have that same power of a developer in there to do certain things, query information, run data, analytics, all that fun stuff, adjust things, build it, make it a more personalized user experience. Like all of that is probably what I would see them utilizing and building into those type of software products.
All right. I'm closing out of these trades. We're just kind of stalling up here. I'm going to reload some limits below us, though. I think there's a good chance we can crack through that low just ever so slightly. So,
Joe, it's going to be okay. I promise. No, I guess there's going to be people that can't get on the train. I think you need to. This is a weird thing. Like, guys, if you know me, like I have a technical business development background. Like that's what I do. So somebody like me that understands at least the basic understandings of what goes in there is kind of, I think, the person who's going to win and not have their job replaced. No, I was not a developer. As I said, I was more of a technical business development guy. So I still had, solution architects and developers running client meetings with me because I can't get in the weeds of explaining this stuff like really, really to a like CTO, like on a technical level, but I can walk the walk, I guess is what I'm saying. They just keeping us stuck up here trying to bait me into shorting this once again. Although if we lose 25K again meaningfully, I would see this turning into more of a range bound day. But we'll see. This is such a tight, stupid consolidation balance area that we've been in for 4 weeks. So who knows?
All right, I've replaced some limits below us in the anticipation that we just barely wash those lows and then catch a bid. Little trappy action, setting up for little traps.
There we go. See, maybe this is the moment. Maybe all I had to do, as I said when I got on air, was not be baited into the first short and wait for us to take out the week open in the previous day high. And then the same short would have worked. Maybe that's all I need to do is just be patient. Instead of being baited in exactly what I said was possible, or just not poorly manage my trade.
All right. It's exactly why I like to close my trade after 25 minutes. Not looking good, just still in profit, but feeling from that high. Got a limit long the Russell here at 42.3 as well. All right, about to get filled in the Russell. Let me show you guys, bring that in over here.
God, we bounced off that same damn spot so far. Can we just like take out 960s just to make me happy, guys?
It might make us wait another 20 minutes.
I mean, it bounced
right
oh
at 11:30. European session close here.
Holding the previous 4-hour high and literally to the tick, like bounced off my big green line, the 21 EMA on a 5-minute. The only squiggly line that I have on a chart outside of VWAP. I think we're going to break though. I think this is going to turn into, rotation back towards the meat of the session earlier. The 880s is what I would like to see. That was kind of going to be my full take profit.
Move my Russell out of here. You guys see that ES coming in? Nice, Luke.
I can't believe my stupid AI teaser has 10,000 views.
I mean, it's a work of, it's like Spielberg directed it.
Shit, to make myself laugh.
You got a new career in animation.
That I don't know, but
Yeah.
I did. This was like video editing and stuff. Like that was a passion thing I had in high school. I used to do this. I actually sold a YouTube channel for $500 at 18 years old before, or I guess it was after. Then it was after Google had bought them. But at the time when I had started it, Google didn't own YouTube.
Wow.
And I had built, it was one video that was just my friend with low resolution phone camera, like dunking, like just absolutely like postering our other friend. And I just had like a snappy title and it had like 5 million views. So yeah, eventually it's just someone offered me $500 and I'm 18 years old and I have like 2 videos on it. So I was like, okay, here you go.
I think you're the first person I ever heard say they uploaded on YouTube before Google bought them.
Yeah. Well, it was because like I took like 2 years of like video production as like an elective in high school as like a freshman and sophomore. I was just interested. I weirdly thought that might be something I'd be interested in doing. Was like going to school to learn that stuff. Like, cause I lived in Southern California. So me going to LA and kind of doing that would not be weird. At least getting involved with some of the studios and stuff. Cause it was cool. It was something I kind of enjoyed, was just making stupid skits with friends and editing it. Like my senior football video, like I wrote, directed and edited the whole thing, which is just like a spoof of us making fun of our coaches and like the seniors kind of saying goodbye at our end of year kind of thing. So did that, like a bunch of other little small things for fun. So always enjoyed it.
You got an IMBD? Can I look you up in your star appearances? Or are you an extra? And
unfortunately, this is about as Hollywood as I get these days. shout out to NinjaTrader Live.
I might have to make an appearance in the Chicago Fire so I can. This guy, the director of the Chicago Fire, I met him at a party, and I guess he trades futures on the side, and he was interested in learning from me. I was like, "Well, you put me in your TV show, we can talk."
I do love that some of the reality show people, they list their profession as like day trader. Like there was my wife was watching Love is Blind, and there was apparently a Forex guy on it.
Yeah, no, I remember seeing that. Yeah, like, yeah, sure you do, bud. When people tell me they trade, I typically respond to them, I actually trade. Yeah, I mean, I know how hard trading is, so. And so we appreciate all of you showing up here every single day, pursuing the ultimate job of freedom and lifestyle. Oh, guys. All right. Let's get these likes up at 700, ladies and gentlemen. We have 630 right now. I think we can bump this to 700. I feel like that's a pretty good like count considering I have hit 3 trades so far and I'm on my 4th.
500 more likes and I'll put the onesie on.
Oh,
okay. Oh, no.
500 more. I don't know if we're going to get that, but if we do, I'll put the onesie on.
Maybe tomorrow. Maybe tomorrow for our four-way trade the open session with Leo, Kane, and XY and myself. Maybe then we can do it for Thursday morning with Jack and I. I just don't have the confidence that we'd get another 500 likes.
So
someone asked the question.
Yeah,
Like,
the risk reward long profit feature is something that I was given from NinjaTrader Live, and I think someone on their team may have that link, and I know they've shared it before, so they may share it again here if they have it available. But Mike, who's the lead developer, as far as I know, gave it to me to make it easier for you guys to visualize, to see the positions that I'm in. So if we don't pop it here today, tomorrow, I believe I'm on Trade the Close, and I'll talk with Mike about getting a link if production may not have it on top of their hand. But I know Jim may have it, but I'll get it for you guys tomorrow. There we go. There we are. Thank you, production. Look at them on top of it. So yeah, you import that script into Ninja and then follow the instructions and it should work. Thank you. You can like my trading style, but do not like my outfit style. I won't believe you if you tell me that. Yeah, no fill on the ES or NQ there, but bottom taking the Russell, which I'm okay with because the Russell really led up this morning. Was the first market to break through the midpoint. It's the first market to get above the overnight high, I believe. It is not a fashion show. You're right. Can't be seen in the same thing twice. I keep having to buy new clothes because I'm on the camera all the time. No, I'm just joking, guys. I don't actually buy new clothes to show up on camera. Oh, we're at 6:59. Ladies and gentlemen, I need 40 more likes. You got to pump it up. 40 more likes and this trade to run to target.
no supposed video, no like. Guys, the video is dead. I said this. It was on a, like, if you guys remember the old white MacBooks from like 2005 to 2008, I think was that edition. That thing is long dead and in a landfill somewhere. And thank God for that.
Thank you for liking it. For everyone who already threw that thumbs up down, that thumbs up, appreciate you.
Nick has taught me patience. Yes, this was maybe I do this to the market when I come on air. It is what it is, but it's not a whole lot to do here. I mean, as soon as I came on, I was already in a short, could have already covered it. I talked about the entry, possibly us wicking back up to the week open or previous day high and then trying the short. Otherwise, until we break this little consolidation to the upside or the downside, breaking this 960s, like there's not a whole lot to do here. You can try the long again. I mean, we keep tapping it. I have a feeling it's going to break here.
They're going to fill me.
Like I said, I would be targeting down to like the 900s to 880s if this 960 level breaks. But yeah, that consolidation's ugly. Could leave a nice little dead body though. It's starting to build a decent node here in NQ.
Y'all want to see a dead body?
Like if you've seen the lovely XYZ setup several times, like this is kind of that. You start to build a large like P-shaped node here, and if you lose it, all that crap buying up here usually gets liquidated. And we've seen this setup, I feel like, a few times. When you and I have been on in the afternoons, I feel like, Jack. Usually doesn't happen just yet, but in the event this continues into the latter half of today's session, that's something I'd be watching out for if the 960s do not continue to hold.
Definitely looks like we're going nowhere fast either way. That's why I'm kind of leaning on the side that we would just wash stops as opposed to getting like a deep pullback. I just can see us just kind of running this consolidation zone and then zipping higher. If I mean, or we just hold this low.
Yeah.
I'm not in the park of a bigger pullback here.
Even,
That failure to push lower kind of is like pretty telling yesterday.
there's just not a lot of interest.
All right.
It's like we push above this consolidation highs up here, these 25,040s. You'd probably rotate back up towards the 25,200s, but who knows?
Who's got some trades on? What are you in? What are you in? What are you watching? Where are the limits? What's your bias? People tell me. So I'll move my Russell position over considering these others are not filling currently. ES short. Got a couple shorts in here. Short from here and hating it. How about target stops? What are we running? What are we looking for? 60% off. Sounds like a deal I like. Iron Condor. Got an options trader in here.
Nice.
So I was cleaning up my Discords the other day because I'm part of a bunch. And Salma sends me a DM. She's like, yeah, I didn't know you were in my Discord. I was like, I had no idea that was your Discord. I got an invite to it probably like 2 years ago. And I just don't trade options. So it wasn't really valuable to me. NVIDIA earnings are Wednesday, right, Nick?
Yes.
Wednesday at the close.
Yeah, they are tomorrow. What day is today? Today's Tuesday. Yes, tomorrow. After the close, the Lord and Savior of the S&P will report earnings. And I'm sure we'll continue to hear about the H200 chips in China for the 800 millionth soundbite.
Right.
Because that continues to hit the airwaves and cause a move in the market for no reason.
Yeah, what's the latest on that? Have they been shipped? Are they
No idea.
we're waiting for the next headline?
Waiting for the next time to tell us, we're going to possibly pull those back or possibly ship them again, or, we're probably onto the H300s by then. Sure, they're obsolete at this point anyway.
I'm waiting for the Apple to come out with a foldable phone like Samsung has, so I could pull up charts everywhere. Just look cool. A low of day sweep. I think that is an aggressive ask.
I mean, do you guys remember the terrible lows from yesterday afternoon that still remain? Because the market hates us. Don't forget, we won't. We did not sweep them.
All right. Yeah, man, if they jam it on this high again, this range is going to get real tricky. All right, guys, I need 18 more likes. Please, if you have not liked the stream, do me the favor. 15 more likes until 700. 700 is my lucky number. Not 700. I will feel proud.
Guys, I don't want to beg for the likes, but please, what are we doing?
What she said. I know many of you have already liked it, and I appreciate you. Now I want you to go on your mother's account and like it from your mother's account.
SV and Mark, you are correct. I did not even look at ES. It did, in fact, sweep them this morning. Thank God for that. That's what I was kind of like. I know I was prematurely trying to get long this morning because I, once again, just didn't think we were going to take out those lows.
All right. Thank you. We have hit 700.
Boom.
Took the words out of my mouth.
Hey, Jim.
Hey, guys.
You're early today.
Well, better early than not at all. Good job today, guys.
Thank you.
This morning I came in feeling a little bearish. But then I remembered what Larry Williams told us last week. On big, big up days or big, big down days where you close either on the bottom or the top, the next day is usually a green day or a red day. It's a reversal day. So he was right so far.
Yeah, I don't see this day turning red at this point.
Yeah.
But
yeah.
That's what makes a market.
Yeah. I mean, the NASDAQ point of control finally shifted up, creating a double distribution here, kind of. So interesting pattern for sure. Are you guys, let me see, remind me your positions, Jack. I'm having a hard time.
I was long coming in. Long. I got long NASDAQ, took it off, had a first target hit, and then I took the rest off before we started drifting lower after 25 minutes. Same thing with the ES. Took it long from basically low tick of this local pullback, and I'm currently only in the Russell.
Got it.
It's at the midpoint from the current day and the beginning of the last leg up. So I'm coming into 5 minutes left on my time. So
what happens in 5 minutes?
I make a decision to either get out of the trade or basically move my stop below the current low. So that'd be 25 minutes since I've entered the trade. And I don't have a first target hit. My first target's pretty wide because I was basing it off a 15-minute ATR. But with the ES and NASDAQ looking like they're taking highs of the day, I feel pretty comfortable as opposed to clearing the trade. I'm just going to be moving my stop up.
Makes total sense. I like it. How about you, Nick? Are you in a trade right now?
No, I got stopped out at break even on my short attempt because we just could not break out of this little distribution we're doing up here. But I'm like cautiously watching this previous day high week open here again to see if we'll reject, maybe take the range trade to the other side. If not, I'm probably calling it a session until we leave this range.
Got it. Got it. All right. Sounds good. Let's give these guys a round of applause for a job well done today. Now, this afternoon on Trade the Close, I think it's Kane, Leo, and Selma. Yes, it's not. I don't think anymore. It is. And are you guys coming back later this week?
Yeah, I'll be back tomorrow morning and Thursday morning with check.
Awesome.
Yeah, I'll be on tomorrow at the close, I believe.
Awesome. All right, cool beans. So great stream. Appreciate you guys. Appreciate everybody hitting that subscribe button for us, and then the thumbs up button for these two young men. They did a great job. Subscriptions and thumbs up are important, so thank you for doing that. Appreciate that. Getting ready to shoot into a edge report, gentlemen. I will talk to you later.
Thanks, Jim. Thanks, chat. Take care.
Let's start with the NASDAQ. I mean, I know we've been showcasing this a lot, but interestingly enough, I mean, here's what we're up against right now. If you kind of zoom out a little bit after the initial balance, what I did was I added a volume profile, right? You could add a volume profile. You could anchor it wherever you wanted to. So I anchored it after this big green candle, after the initial balance ended, just to kind of see where price action has been. This is a 30-minute candle. You could do it on 10-minute candle, any kind of candle you want. And just kind of looking, what's the volume profile look like right now? So you can see the point of control is pretty much the same point of control as the daily point of control, which suggests that there's a lot of price happiness here. And that price is at 25.015. And the million-dollar question, of course, is where are we going to break out? And are we going to break out to the upside, or are we going to break out to the downside, or none of the above, or are we going to stay in the middle? So if you're like me, you're anticipating a breakout of this little range one way or another, and we see the peak high is at 25.047. Previous session's high is just a little bit above that. That's at 25.059 and 3/4. Now, should we break out to the upside here? We got all sorts of super awesome targets. We have the blind spot one here, which is at 25.116, and that 1 day max, that MenthorQ level at 25.123. I think this is an old weekly open. I have to double check that, so ignore that for now. So there are definitely targets on the upside. Now, on the downside, though, should we get a breakout to the downside, we also have an awful lot of targets. Let's zoom out. We have this volume deficit right here. This is a low volume area right below the volume profile, the anchored volume profile that I just popped in there. So low volume, sometimes you get some quick penetration through those low volume areas before the dust settles. So keep an eye on that. The old point of control is all the way down here by that PAX number 24,875. Round up a little bit. And look at the VWAP. The VWAP is really, really, really far away from the actual price right now. So bulls are definitely in charge right now. Not enough to get us this breakout just yet, but it's a long day. Anything certainly could happen. So we'll keep an eye on that. If everything falls out of bed, which I would be surprised, you got some JAX levels at the bottom. JAX 3, JAX 2, JAX 1, all the way down there. Again, not too enthusiastic that that's going to happen. Lastly but not leastly, well, let's keep rolling here. I do want to remind everybody the Treasury bonds. I have two. You can see on the left-hand side, I have the March bonds, and they've done 609,000. And I have the June bonds, which is the next front month, which has done about 510,000. So the volume is there on both sides. Trade whichever one you want at this point. The next couple of days, you'll see that volume swing over to June contracts. So it's going to be a couple of days for that to happen. And that's true for all of the treasuries. All the interest rates are going to do that roll next couple of days. We'll talk more about that probably tomorrow during the morning show. So that's kind of two. And lastly, let's just take a peek at the Bitcoin here. Bitcoin kind of fought off the mat a little bit. You know, it was about to get pinned. It was not doing so well. But low wick, 62.5. Let me make sure I got that exactly right. Low wick, 62.580. Rallied off of that, rallied through the initial balance. This is going the same way as the equities. We crossed VWAP right here during the initial balance, and then now we're continuing up higher as well. So again, we have a target wick all the way up here. That's a 64,535. So there could be some possibilities here in the Bitcoin. I would be interesting is if we have a close above previous session's lows, that'll be a little bit constructive. I mean, still, this is, look at the daily chart here. I mean, this is not really that good. You know, the hamburger bun here, it got shifted a little bit this morning. Apologize for that. We closed below it yesterday, and then today we're still trading below it right now, just kind of with a really small body candle and definitely a small candle altogether. That swing low is still in focus at 6205. All right, that is the Edge report. I do want to remind everybody about a couple of promos that we have, a couple of opportunities actually. Monday, I'm sorry. We are giving away, we're launching socials, brand new socials for NinjaTrader Live. And in celebration of that, we are giving away 5 lifetime licenses. And remember, a lifetime license gets you a better commission. So if you're trading some volume or, you know, you're day trading, most likely you're going to do better on the commission side with the lifetime license. If you bought it outright, it's $1,499. So you have a chance. We're giving away 5 of them. We're going to announce the winner on Monday's show. Just follow the link in the chat, and you'll be able to go ahead and register and sign up for that opportunity. The second thing is, of course, starting Monday also, a lot of stuff Monday, we have March Madness. We have that March Market Madness Arena, giving away $20,000 of pool money. There's going to be 100 winners in this thing. So top prize gets $2,000. So if you haven't registered yet for this challenge, anybody could do it. It's free, it doesn't cost any money, and it's an awful lot of fun. If you've done past challenges, you know, you can see your performance, you know, alongside everybody else's. So it's super, super cool. So hopefully you'll do that. In the meantime, we'll be back at 2:00. Me, Shai, and Kane, Leo, and Selma trading the close. So have a nice, relaxing lunch. We will see you then.